Are
We
we
are
live?
live. There we
We're
go.
live. All right. Multi-mega stream. We'll start with three, but there'll be like 10 in here in a couple minutes. How's
Yes,
everybody doing? Hans, Yashu, what's going on? How you guys doing today?
I'm doing well. I'll let Hans finish his bite of food here before he talks. But I hope everyone's doing well. Happy Tesla earnings. It feels like not that long ago that we were talking about the last one. And I mean it's super exciting times, but I'm not sure if you guys feel this as well. But it feels like there is very low expectations for today. Almost like people are expecting kind of blood on the streets a little bit.
What do you think, Hans? Is that where your head's at?
Yeah, I mean I've thought it's interesting how much the stock has run up over the past few weeks, and so yeah, I don't. It'll be interesting to see if this is a buy the rumor, sell the news. I know that obviously margins are a huge concern for people, but really the things that I'm interested in are just going back to the long term things. I want to see any updates that we get on 4680 ramp progress. Hopefully we can get an announcement of when the first delivery date for Cybertruck is going to be. And then looking at FSD, Optimus, and energy is going to be another huge one to see where the revenue is trending there. I know that there's a lot of contention in the community about, hey, deployments are spiking massively, and so we should start seeing flow through to the bottom line. And a lot of other people think that just the length of time that those contracts take, and when the revenue will actually be recognized, is kind of delayed. So yeah, interested to see all of that. At the very least, I really hope that we get good numbers on what the deployments have been, so we can track the production and deployments.
Yeah. Matt, welcome in. I see that you're now grifting on rebellionaire.com on your name. What's that about? Can you tell us a little bit about that?
Yeah, so I think most people know my Twitter handle, and it's a hot mess at Matt Chasm Matt or something just crazy like that. So I thought rebellionaire.com would just be a little easier. That's so for those who don't know, I work with Bradford Ferguson at Halter Ferguson Financial. Just launched rebellionaire.com, and it's really um, targeted at people who have high concentrations but want some financial advisory work or financial planning as well. So we try to provide financial services to those people who have high conviction in names like Tesla, but are eschewing the traditional financial model. Like, we've had a lot of clients actually say, like, my broker wouldn't work with me anymore because I was holding too much Tesla. They told me, like, you've got to sell, otherwise like I can't help you. So we're trying to help out people like that who do have high conviction.
Nice. Where's your head at? So Yasha was sort of mentioning that there it seems like a low expectation earnings. Where do you think Tesla's going to come in?
Yeah, so I would agree with that. My numbers are 86 cents. I always try to be as middle of the road as possible. I think margins are definitely going to take a hit sequentially. I don't think there's any way they can pull a rabbit out of their hat on that one. Hopefully they can, but for me, the math is just hard to make it work given the magnitude of the price cuts. So I think given that, and given that the market seems to be relatively appropriately, kind of pricing that risk and looking at the analyst estimates, they're not, wildly optimistic or anything like that. And even the bulls, I think, are relatively tame in their expectations overall. So there seems to be wide agreement that this is going to be a trough quarter, and that's okay. So then the focus is going to naturally shift to, all right, what's next? So I think forward guidance and even just like the tone of management, like what are they thinking? Are we just going to be 6 months in the road, like down the road, and then going to have to go through this whole price cut thing again? Or do they have, something better they can share on kind of demand stabilization and anything on, cost cutting initiatives to stabilize margin, things like that. So yeah, that's kind of where I'm thinking. And I did hear the kind of tail end of what Hans was saying there, and agree. And like energy is one to definitely keep an eye on.
Yasha, you want to give more of your thoughts?
Well, I think the first thing is we know for a fact that mainstream media is ready with the negative headlines for today's earnings. It's kind of it's very easy, right? Like this is like an underhanded, grade 5 girl pitching me, for a home run swing. It's very easy, and I guess I don't want to get canceled for that. But one thing that's interesting is that we know the negative headlines are going to come out. I think sub 17% gross margin ex dev credit, something like that, around there. I think there's going to be little things that we can look forward to with Tesla earnings, or pardon me, Tesla Energy, and perhaps as well an update on Cybertruck. But I kind of want to talk about Cybertruck a little bit because everyone seems to think that we're going to get a date today with Cybertruck, and this is going to be the launch event. Do you guys think that's going to happen today, or do you think that's going to be like, hey, we'll announce it when we announce it, and this is not the event for us talking about the Cybertruck?
Who wants to take that first?
I think the latter. I agree with you, Yashu. I don't think we're going to get a date today. I think they'll kind of reiterate that there's an event that they hope to hold close to the end of Q3, date TBD, but that will be the Cybertruck event. It would shock me if they go into any sort of detail about Cybertruck right now.
I think they'll have a date. I think they'll have a date, but they won't have the price. I think they'll do like, hey, on this day we're going to do the handoff event. They'll, I read something. I got this idea from somebody on Twitter. I forget who said this, but they'll have a handoff event date. They'll start with employees, and on the handoff event, they'll give more details like pricing, trims, what to expect, just to say, hey, we've launched this thing on Q3, and then they'll start their slow ramp. And the reason why I say that is, if you look at Model Y and when the first Model Y was produced out of the factory, it was in January of 19 or 20. I forget which one it was. But it
19.
was about 2 months, 19, and it was 2 months later on March that the first deliveries were made. So it was only about 2 months after. And we've seen the prototypes driving around the roads really for a few weeks now. We have the Camel one driving around. We have the first one built out of Austin. So I think it feels like delivery is close. And it feels like this would be the right setting to communicate that, especially if things like margins for the cars are a little bit softer than expected. Would be a good way to sort of shift the tone. And then the other thing too, and I want to highlight this might seem stupid, but I really think there's a little bit of credit to this. Let me see if I can figure out how to do this on my
Knowing you,
other account.
it probably is very stupid. Knowing
It is.
that
You're
would bring it up.
100% right. You son of
And
a
by the way,
bitch,
I'm really
Matt.
happy that you were able to squeeze in Matt's face into the thumbnail somehow.
It looks good, right?
Efforts. Yeah,
It looks pretty
was very
good.
hard.
Yeah, you're very welcome. Here's Elon's tweet. I can fart hard enough to inflate a car tire, and he tweeted this about 3 hours ago. I mean, do you think somebody who's not in a good mood would say this? I feel like there might be a little bit of something there. But yeah, just on a lighter note. But I do think that there might be a date. Hans, what do you think? I saw you came off mute before I started rambling.
Yeah, I just thinking back to the Model S delivery event when they refreshed it and released the Plaid. I think they have to announce that a little bit in advance. So it depends on if they do employee only delivery or if they do a delivery event that actually includes people from the public. Because if they do one that includes people from the public, we have to get some advance notice so that people can make travel arrangements. I think probably it's more likely that it's going to be an employee only handoff event, and so it'll be more like the Model Y than the Model S Plaid, which means that we may not actually get that advance warning, but we'll see. I mean, those are really the two options that we have.
Yeah, what about the Gen 3 platform? Because when we had the Investor Day earlier this year, Franz started really kind of dropping some hints around that. Franz von Holzhausen, the chief designer, for those who don't know. And he indicated at that point, that this was not the right venue to talk about that car and do the unveiling. But it seems like we might be getting pretty close to that event too. I mean, does it make sense to even couple those somehow and do them later on this year potentially?
Yeah, I mean,
just thinking through the event, like if we need an AI Day 3, probably, which I think we probably do at this point, and we need a Cybertruck event, and we're going to reveal the Gen 3 platform at some point. Like, I don't know, you probably want to combine some of that.
Yeah, and it makes sense. And I think Tesla is very, like, Elon says this a lot, where it's like, this is not the venue for it. We need to respect this announcement and not give out details and make it its own thing. And Tesla earnings are very, I think, nonchalant and very boring for Elon at this point. So maybe he gives us some teasers, but I wouldn't expect him to jump the gun on it per se, because I think, at the end of the day, I think the Cybertruck probably deserves its own event outside of anything else, just because how monumental I think the Cybertruck unveiling is going to be in the first couple of deliveries that go through. But at the same time, as you guys know, I'm probably the latest on timeline on this panel. Maybe I think the Cybertruck's probably going to be until January 2024, at least until we start seeing some deliveries coming out. But I'd love to be proven wrong on that.
Did you see Richard Shiro's post about apparently Elon just talked about driving a plaid Cybertruck. So I think that's the first confirmation that we've heard, if that's true, about there actually being a plaid trim of the Cybertruck, which I mean isn't super surprising, but it's cool to actually see that.
I'm looking through Twitter right now. Saw that as well, but I can't find it. Send us a link if you have it. Whoever found that, maybe we're getting trolled. Who knows? We'll see. Which is very possible. Real quick, for those that are watching, this is a mega cast, a multicast. So it's streaming on this channel, my channel. It's this channel, as if everyone's channel is going to be this channel. So it's my channel, Hans's channel, Yashu's, Investing Against the Grain, and Herbert, I believe, are the 5 streams. So thank you all very much for joining. If you want to support your favorite creator, you can go to any one of ours. You still get this stream. And then Herbert and Nico should be joining us very shortly. We did go live a little bit earlier because we had a few guys available for us to go earlier. And then we also have more folks joining us later. Alexander will also be joining us and a couple other people. So do you guys think, so around the margin question, so do you guys think that the margin for Q2 for the vehicle margin is going to be this big number that everybody's focusing in, which is going to heavily dictate how the price behaves after hours? Or do you guys think that that's already baked in and we're sort of past it? How do you guys think about that equation, if anybody wants to take that?
Yeah, I think it's just if it surprises, there'll be a move. I mean, the market seems to be pricing in something in like the 17, 18% range based on where, analysts are coming in, excluding credits. And so, if there's a big beat on that, then I think that could move the stock a bit. Or if it's a big, miss, similarly, I think it could move it. But I think for the most part, like, the market's kind of pricing this in and is expecting what it's expecting. And unless there's a big surprise either way, I think the focus is going to be more on forward guidance and, hey, what can you tell me to like get me excited about AI? Because that is like the hot topic du jour. So is there anything you can do to kind of tickle my fancy as a Wall Street analyst to say, oh, I can start baking in some revenues beyond just what I've been able to do with FSD so far. So I think if there's anything they can share on that front, that might go an extra distance.
Yeah. So quick fact. So since last earnings, Tesla's up roughly. Can you guys guess before I give it to you? What percentage is Tesla up since our last earnings call, roughly speaking? What's your guys' guess? Don't worry about being wrong. You probably will be.
80%.
I was gonna say.
Oh, sorry. Yeah, Matt, Hans.
Go for it, Matt.
I was gonna say 100%, just ballpark.
Okay.
Yeah, I'm thinking it's like 75. I think we were at like 175 around last earnings, so up $125.
Okay, so some people in the comments as well getting it right. So actually, it saddens me to say, but Farzad was actually the closest on this. 82% is what Tesla is up roughly since last earnings, which is nuts, right? Like,
where's my juju?
Yeah, well, go buy it yourself with all that ad revenue that you're getting because you're killing it right now. Now, listen, I think at the end of the day, Tesla's up 82% since last earnings, folks. Like, we have to keep that into context with when we talk about margins. I think, and this is not like people are saying, okay, well, this is an all-time high rally ripper, and I hope so. But when stocks move this much this fast, there is some settling down that happens before continual momentum upwards. And so to me, the risk is more on the downside. And I think the base case is flat, even if margins come in decently well, considering expectations. Like if Tesla beats the whisper number, maybe, Tesla goes up a couple of percent, but I don't see a big, and Tesla notoriously doesn't move up very much on earnings usually. So I just think the risk is to the downside, but not massively so, even speaking. Like $270 is our 21-day moving average. So, I think at the end of the day, when we talk about that, I think we talk about earnings and margins and whisper numbers and expectation. I think it's just good to have that into context. The Tesla is up around 80% since last earnings.
So it sounds like then a breakthrough in full self-driving or the AI portion of the story is really going to be the next leg up for the stock. So I guess, in other words, you don't see this getting back to all-time highs without FSD. Is that a fair way of encapsulating that?
No, I'm not saying that. I'm just saying that I think it'll take time. Like, I think macro has to turn. Not that it hasn't, but I think it has to continue to turn. AI, though, yes, I mean for sure. But here's the thing with Tesla and AI that I've noticed: when Google says something about AI, Apple says something about AI, like today, the stock market just gets super giddy on that. But when Tesla and Elon talk about AI, it's like the market doesn't care about it. When Elon talks about AI and Dojo and teraflops and all this sort of stuff, it's like the market is almost like, yeah, we'll kind of believe it when we see it. But today, like, I'm not sure if you guys saw the news, like Apple talked about, hey, they're gonna try to build this competitor and do research into OpenAI and build a competitor, and like the stock jumps up massively. So I think there's a little bit of a discrepancy still there yet with Tesla and you.
And I think part of that's probably around the way that it's messaged. I mean, I saw someone in the comments said like, Nvidia. What about like Nvidia and Microsoft? Well, what did Nvidia actually guide for? Like a massive, like 55% quarter over quarter increase in revenue, with a huge chunk that was going to flow through the bottom line. So they were messaging it in like forward guidance that was very clear and very near term. Microsoft similarly yesterday came out with a 55% increase, I think, in their pricing for their Microsoft Office suite that had AI enabled, like generative AI capabilities. So like that's like, again, an analyst can say, oh, I can just type that in my Excel formula and like the price should go up. I think when Elon talks about like the best approach to have like a universal, like not just a local maximum, but like a overall like universal solution to FSD. Like he gets so in the weeds that I think he talks about like the super long term, and he talks about like the technology and how they get there. But I think what he doesn't do is like bridge the gap of like how that's good news in the next 24 months, which as a long-term Tesla investor doesn't necessarily bother me. But that's, I think there's at least some justification for the fact that, like people give them the benefit of the doubt. Or the opposite of the benefit of the doubt. Sorry.
Not
Don't give
the
him any credit.
Yeah. I do really wonder if what kind of tone Tesla's going to have on this call is sort of something that I'm thinking through, especially with the latest announcements around NACS. Uh, the sort of a lot of these automakers taking this on. I was on a space with Wolf and Evan and those guys on Twitter, and this is the first earnings call I believe we'll have since all those NACS announcements came out. And I wonder if that's going to really set a certain tone on the call for investors. That's going to say, hey, remember that thing we've been working on for the last 10 years of really becoming this almost ecosystem for electric vehicles and all these things we're working towards and the charging network. Look at all these legacy automakers that have jumped on our wagon, that have hitched their wagon to our horse, rather. What do you guys think about that? And I wonder if that's going to be part of the rhetoric.
It's huge. I mean, it is. But here's the thing that I saw a certain bear going around mainstream media talking about, well, this sucks for Tesla. And, how dare you say this is bullish, because now everyone's going to be hopping on Tesla's supercharging network. And if anything, it makes those cars more appealing, blah, blah, blah. And he was basically saying, hey, show me your calculations and your earnings model where this helps Tesla. And I hope actually Tesla can provide a little bit more clarity on monetization of this, because to a degree, I take the point that we don't know the specifics of the deals and the upcharge that these legacy automakers are going to have to pay. To me, they haven't absorbed the cost on any of this. So to me, and I got some flack for this, I said, if you own a Mach-E, you should pay way more than myself charging at a supercharger network with a Model 3 because I own a Tesla. And I got a lot of hate comments on that. But I just think it's only the free market. Like at the end of the day, if all these superchargers get filled up with insert legacy automaker EV here, then it disincentivizes people to buy Tesla. So I think there's some sort of structure that needs to be a little bit more transparent, and perhaps they're working through that right now because it is a next year thing anyways. But I think that might be a low key, hey, we have the model now. It's going to be a 15 cent, 20 cent upcharge on kilowatt hour, or time based here in Canada for some reason, and they can start modeling that out versus legacy auto sales and EV sales and percentage of the time that they're going to be charging there. And hopefully we can get a little bit more granular with earnings on that aspect of it. That's a great call.
Any other thoughts? What's the biggest thing you guys are looking for on this call specifically? Like, what is that big thing that if they mention it, you'll be very happy for the rest of the year, for the coming quarters. What are you guys thinking about? Let me add Nico here as well. There we go. Who wants to take it?
Yeah, I mean, so I don't think this will be something that they do, but like I've been waiting for many years for them to start disclosing more information around FSD take rate. And I think one of the things that is misunderstood as a catalyst, or just like nobody's paying attention to it, is there are some draft regulations in Europe that could enable FSD beta to roll out as soon as January. And so if you think of what that could do, just as like an ADAS system and like the margin potential of that going forward, even if it still is like in beta mode where it's, not amazing, it's still like incrementally more people will buy it. And then you've got the entire history of people of Europeans who have bought a Tesla that you can then try to backsell this to. So, I don't think they'll start disclosing. Like, I actually don't think FSD take rates have increased to date. So I wouldn't expect that they'll say that. But I think if they started to give some more guidance around metrics that they will be disclosing in the future, because they expect take rates to increase as functionality is released in more geographies, that's the kind of message that I think would get people thinking about this a little bit more critically and saying, okay, yeah, there could be like significant margin potential down the road. It just from opening new geographies, even if the functionality isn't any better than in North America. But like, if everywhere was as good as North America, then that's also good news for the company's financials. So I'd love to see some commentary around that.
Nico, let me go ahead and bring you in. Investing against the grain. Look at how handsome this fella is. What's going on, buddy?
Hey.
What's the biggest thing you're looking for from the call?
Before that, can I just do a quick mic check? Do I sound okay?
We can hear you.
All right, cool. Yeah, honestly, I'm kind of just all about FSD beta these days. I think that's the biggest thing. I know everyone's thinking about margin and stuff, but that's short-term stuff I don't really care about. So anything around AI Day, FSD 12, not beta, anything around that, any news, I think that would be interesting. I'm just hoping Elon goes off the cuff and just starts saying the random stuff like he normally does on those topics, where I think in the past, when he'd go off about Optimus, people would be like, oh, God. I mean, do you remember that? I think it was Q4 last year. He just saying Optimus, the most important item or product that we have right now, and the Wall Street hated it. I think that would play a little differently today. So that's what I'm hoping for.
Okay, that's fair. Hans, Yashu?
Yeah, I think one of the questions that's on Say that I'm interested to see if they answer it or not is just their revenue expectations for Robotaxi. It's something that gets talked about. I think that I can anticipate Elon's stock answer about it, multiply the value of the car by about 5 and kind of go from there. So we'll see what they say, but that's one area. Very interested to see if we get any commentary on Dojo, since supposedly it is actually being used on production workloads right now. I'd like some clarification on what does production workload actually mean. And yeah, I think that both of those areas would be really interesting. And then anything on bot, it seems like every event right now we're getting some sort of like a teaser video on bot updates, and so really excited about that as well.
Yeah, I'm gonna say what we're all thinking, but don't want to say. Mark Zuckerberg, Elon Musk fight at the Coliseum. That's probably the biggest piece of news that can come out from Tesla earnings today, to be honest. But barring that aside, and I think we all know who'd win there. I think, first of all, getting any data, and we're not going to get this, but here's me throwing this out just for fun. Getting FSD interventions per mile, or how many interventions per 100 miles, or whatever metric that we want to use to measure progress of FSD beta would be nice. We're not going to get it. But in lieu of that, if FSD really is so close to the end of the year, and we got like let's say half the year left, what would be really interesting to get out of this earnings call would be Tesla's launch platform or launch strategy for FSD. And perhaps it's, in Las Vegas, Elon talks about, in Las Vegas with the Hyperloop, we're going to launch driverless here, and we're going to pilot with this many cars, and that's our model. And we're gonna essentially have a white paper on this so we can expand and franchise this out across fleets. Like some sort of strategy talk on the release of FSD would, to me, be a huge signal that FSD is indeed coming out by the end of the year, because by the time next earnings call comes around, if we want to talk about FSD by the end of the year, it's almost like too late to talk about strategy at that point. It's about execution. So I think this earnings call kind of puts it at the middle of the year, talk about strategy a little bit. Let's get nitty gritty with when FSD does happen, what is the best way for us to launch this out? And I see a lot of funny comments coming in, but I'll throw it back.
The troll comments on this stream are A+ today. Fantastic job, everybody. Thank you very much. Yeah, go ahead, Matt. Go for
I was
it.
just going to say, like, in that vein, I'd like to hear a little bit more, Elon nerding out about what this breakthrough is that he was talking about on that Twitter Spaces with the XAI team. That's something he was really cagey about. I mean, and from just the way that he was talking, normally he's like incredibly forthcoming with details on stuff like that. So part of me wonders if it was just because it was an XAI space, he didn't want to take the focus away from them. Part of me also wonders, is this like such a big breakthrough? Like, I mean, thinking back to the Transformer days where, that was released publicly and it was such a huge technical advantage that maybe they shouldn't have even done that to release that kind of technology. So it seems like they might have some, Transformer level AI breakthrough that could, really change the game. And so if he could share any news or any details about what that is, or even if he can't do that, about why it's important and why it's going to change like the way that they have been doing things to the way that things will be done in the future, I think would be pretty helpful.
Yeah, and just I agree with Yashi. Like in the past, I would have cared a lot about those interventions per mile, but I think with this idea of how we're seeing FSD 12 and this world model that we're speculating about, I don't think any of the interventions per mile data we have now would be pertinent. I think it'd be irrelevant because now we need that number on this new model. So that's what I want to hear about. So I'm with both of you on that.
I do wonder too, like I've been thinking about this a lot lately. I don't know if you guys feel this way, and maybe I'm late to this party, but things like Dojo, things like FSD, things that are long-term plays for the stock and its valuation. Maybe in the past, I'm going to speak for myself. I gave a lot of value to the guidance that we were getting from the company. And as of late, I'm much more biasing towards actually seeing it in action and coming to fruition before I fully give them the benefit of the doubt and actually see it come alive. Has that does that resonate with anybody? Has that shifted for y'all? Is it just a journey that I've gone through that maybe I'm finally where I need to be, or maybe I'm not thinking about it correctly? I would love to hear your thoughts on that, if anybody has any thoughts.
Yeah, I'll just jump in real quick because I feel kind of the same way, but I think it's happening because we're getting to a moment where all these things are starting to come to fruition. So it's only natural for you to want to feel that way, right? We're getting closer to FSD. Dojo's finally coming online. Cybertruck's finally coming. And so, of course, now your sentiment's like, well, I'll give them credit for it when it comes out officially because now we're at the 1 yard line. Don't fumble, right? I think that's where we're at.
And I just add on, like, I definitely resonate with that. I mean, thinking back to, 3 years ago, 2 years ago, when I first got FSD beta, I guess it was October of 2021, I think. And it was like, I was expecting the rate of improvement to be so much, quicker than it ended up being. Because, what Elon was always talking about, and I think it's definitely true, is that people have a hard time thinking exponentially. And so the progress, people were expecting it to be linear, and so it would take, many, many years. And it looking backwards, the progress on FSD that, like, from a user's perspective, does seem very linear. Like, it was really bad when I first got it, and then it was like a little bit less bad, and then it was like okay, and now it's like pretty good. And those intervals came in like somewhat quick success or consistent succession there. But that doesn't mean that like Elon's comment was wrong. Like, it still is going to be exponential progress. It's just that they've kind of barked up the wrong tree a couple times on some of their approaches. So if they really do have the right approach now, and they've got more compute lined up to do training and everything, then we could see a much more compressed timeline. But I'm 100% in your camp, Farzad, that like I'm not going to just give them credit for that and say it's going to be like autonomy or there's going to be a robo-taxi ride by the end of December. Like, no, let me experience a couple of those, releases first before I give any credit. I mean, we still don't have actually Smart Summon, and he's been talking about that for years. So,
Hans or Yash?
One of the things that I kind of realized after listening to the CVPR talks this last couple of weeks was that I think that Elon's optimism around actually solving FSD kind of ties back into, if you think back to DeepMind and when they originally made AlphaGo, and so their first system, the one that actually beat Lee Sedol, that was a system that was actually kind of that patchwork of blocks with heuristic code bolted onto the side of it. That it's like that first proof of concept system that they have to make before they can actually create, using that, they can create an end-to-end system. And that actually worked, and it was better than human. And I wonder if Elon expected that the same would actually end up being true for FSD, that the approach that they have been taking now, he thought was going to get to that point. But just because of the numbers of degrees of freedom in the real world, they are having to get really close to having that full end-to-end system in order to be able to get it to work. And so, that's a little bit different scenario than we saw in the roadmap for DeepMind and, AlphaGo, AlphaZero. And so I think that's one of the reasons that we've seen it play out the way that it has. And, hopefully the rollout of 12 does give us that full end-to-end architecture. We'll see how that goes. But that, I would love to hear more commentary on that, because, I think I know that they're very optimistic about getting that into customers' hands by the end of this year, but I don't know, like re-architecting to that level at this point in time, I think could have some surprising challenges once again, and we could be pushing out into next year.
Yash, go for it. And in the comments, let us know also what you're thinking about for this call. We'll bring up some viewer comments and maybe take one or two questions, and then we're about 10 minutes away from market close, and then a few minutes later should be Tesla's earnings. Yash, go for it.
Yeah, I will agree with the timeline, but I would say I have the opposite problem. I almost sandbag too much in my head mentally past what's even like remotely probably true. Like example one, Cybertruck, I think next year probably is the first delivery, even though everyone I think agrees that it's probably this fall. But that's why I look at what Tesla almost hints at rather than what is said from Elon. Because remember, Elon is not only just optimizing by telling us the truth, he's also trying to optimize for employee morale, right? Like a big part of his job is to rally the troops, to make sure that there's optimism in the group, that this big project so monumental can actually get completed. So I think there's a degree of like throwing out optimism as well to make sure that everyone that's working on it feels excited about what they're working on. But back to my point about what Tesla hints at more than, or what Tesla shows in terms of their hand. And again, I think the rollout strategy for FSD, I don't think we're going to wake up one day, FSD 12 comes out as a software update in our cars, and then it's a free for all for fleets everywhere. I think there's some sort of platform, there's some app update, there's some subscription model that goes out, like who's cleaning the cars, who's charging. Like there's going to have to be some infrastructure built here, albeit just software mostly. But even some in-person physical infrastructure that has to be cleared up. It's not rocket science, but at the end of the day, it has to be done. And I think we'll get that sort of a signal ahead of their launch in a city. So at the end of the day, though, I mean, part of what makes Tesla so exciting is that we can be optimistic about this sort of stuff, and that robotaxis are a thing when no one thinks they're actually going to be a thing if you talk to your average person. And yeah, maybe it's stupid that we believe in this, in all these things, and then we think that this can happen. But that's part of what makes investing. That's part of what makes Tesla. That's part of what makes technology so enticing for everyone, is that we can look towards a future that, wow, like 10 or 15 years ago, we would have never thought this would have existed, but here we are now, and being able to predict that next thing, and to be able to live in that fantasy land almost, so to speak, of what could the future look like. And it's only so far away now, is super exciting. So
You just gave me goosebumps.
what kind of
They should just hire you, bro, for the earnings call. They should
That
open
was-
with you.
That was a powerful, motivating speech right there.
I guess I channeled my inner Tony Robbins a little bit.
You did great. Let me pull up a couple comments from our communities. These are across all communities, and it might show whose it is when I bring it up. I'm not really sure how this is going to work. So this is across all 5. By the way, thank you all so much. My counter says 3,000 people are on. I don't know if that's across all channels, but I mean, that's insane. So We're almost half the size of CNN. Hans, I don't think people on the other streams can see my comments though. Well, there you go. Now they can. You're welcome. Question. Do you think they'll talk about, from TNL, do you think they'll talk about current run rates for Austin and Berlin and a DBE ramp progress? What do you guys think about that? That's actually an interesting call out. Anybody have any thoughts? Dude, we got 5 people. No one's talking.
I sure hope so. I mean, this has been one of the slowest, we've been talking about things that take longer than expected and show me rather than give me what your expectations are. 4680 ramping has been like molasses, and there's an incredible number of technical challenges that they have to overcome to get DBE working. So I'm not surprised, I guess, on the one hand, but the fact that we do get so few updates about this on any of the events definitely doesn't make me feel great. And I would love for them to be a little bit more open, because I think even was it the shareholder day that they had all of the 4680 equipment was not really visible. You couldn't see any of the stuff. They had all that area of the factory blocked off. So it's something that we definitely need to hear more about.
For those that are not familiar, DBE stands for Dry Battery Electrode, which is part of their 4680 technology. Thank you very much for your question. This comment I found to be very fascinating from Curious Sand. It's from one of y'all's channels. It has a little chain on it. Since the Tesla community continuously is digging up all potential new stuff Tesla is working on and have not yet completed, it's hard for Tesla to surprise with something completely new and finalized. Just a fascinating comment, and I think I 100% agree with that. What do you guys think about that? We're all here spoiling everything.
I wouldn't say anyone spoiled Optimus.
That's true.
No one saw that coming.
That's true.
Well, it was actually part of Farzad's theory. Remember, Farzad, you were saying, well, if Tesla's going to come out with this like 30,000, 25,000 model car, there's so many people that work on these lines that it's bound to leak before it actually comes out. Like, we're not going to just be surprised by it. And I guess that's what kind of like Highland is the funniest thing right now. It's like everyone, like, does Highland exist? No one actually knows at this point, right? Like, it's one of those things that everyone's trying to figure out. But I agree. But to that comment's point, like, we almost overshoot, take stuff that doesn't exist and try to connect the dots a little bit, and then it turns out to be nothing really there at all. So I think it's both sides of the sword there a little bit.
Good.
I was just gonna say, what was it a couple years ago? The 1211 thing. Everyone was hyped, like something was gonna happen on 1211.
1221. I think it was 1221. Oh, 1209. No, 1209. Yeah, December 9th.
I remember this.
Oh, yeah.
Tesla numerology. Yeah, that was wild.
Yeah, I think I even had like a thumbnail with like me wearing a tinfoil hat and talking about it. So it was a big thing. Let me know in the comments if you guys remember that.
1209. Your camera is shaking, making us motion sick. I'm really sorry. I have a makeshift table. I've been experimenting with a lot of off-the-cuff things in the last couple of weeks, so I appreciate your patience. Thank you very much. We'll be back in the studio over the weekend, I promise. I don't even think we talked about this yet. I haven't heard much about the energy business lately. AI has overshadowed it a lot. Are we making gains in the energy storage business? Maybe Matt, do you have any thoughts here, since you literally know everything about energy across every space? Right. What do you think?
Yeah. So we are making gains. I mean, you've actually started to see this in the last couple of quarters, but it's just that we're at like the very kind of beginning of the S curve on that ramp. And like the Lathrop factory, when that hits full stride, I mean, that's going to be a $20 billion revenue a year facility. But they're not there yet. And it's going to take longer still from the point where they manufacture at that rate to the point at which they're getting deployed and the revenue is recognized, because there can be some significant lags on revenue recognition, especially like if one of the milestones for revenue recognition is interconnection. That is like the biggest bottleneck in a lot of projects right now, and that can take many years. So it's going to take a while, I think, for that to ramp, but we're definitely seeing the progress. And I think looking at the analysts' numbers, I think Gary Black posted something about what analysts were projecting for Tesla Energy a couple of years out. And the numbers that they're projecting are just like woefully low. So I don't think it's going to like rock the boat or, cause like, if there's a huge beat on Tesla Energy today, I don't think that's going to move the stock necessarily. But it is one thing that analysts are definitely underestimating right now. And just like one example, we were talking about 4680 and like DBE ramping. how many people remember that they're planning to build a 100 gigawatt hour factory at Giga Nevada right now too? And so like one of the facts I like to throw out there is just the credits, just the regulatory credits on that alone is $4.9 billion a year once they hit scale. So think about that dropping to the bottom line. And if you aren't like baking in the extreme growth of Tesla Energy, then you're definitely missing a lot of the margin potential. And so I think, I mean, Elon commented recently, I think it's growing at 150 to 200% annual run rate, which is obviously a lot faster than auto. So if you just compound that for a couple of years, all of a sudden it is impactful. So it's still small this year, even though it is growing at a high rate. But if you fast forward to say 2026, 2027, and you're not doing that compounding the right way, your models are definitely going to be low.
Thank you for that, Matt. And then lastly, we're 2 minutes away from market close, and shortly thereafter will be Tesla earnings. Greetings to all, not legal advice. Richard, thank you so much. If life gives you melons, you must be dyslexic. Thank you, Richard. Always giving us very wise advice. Thank you, brother. All right, we are 2 minutes away from market close. Okay, real quick, around the horn. Hans, Yashu, Matt, investing against the grain. Nico, let's get your final thoughts here. 30 seconds, and then we'll see what Tesla comes out with. Go for it, Hans.
Yeah, probably somewhere sub 90 cents EPS, and hopefully we get Cybertruck date. I think it's low probability, but that's one of the big things, and definitely looking forward to the Optimus comments.
Yashu?
I'll say closer to 17% gross margin XF credits, maybe low 80s, 80 cents ish for EPS. But again, I think the wild card could be the energy margin this quarter.
Matt?
Yeah, so I'll stick with my 86 cents adjusted earnings per share. I think it's probably going to be a mixed bag report. I think there's going to be some bright spots and some spots that are, disappointing a little bit. So I think the kind of vibe on the call and anything they can give on like forward-looking guidance, even if it's not explicit financial like numbers guidance, I think what are they thinking about for the rest of the year? I think that'll be what has the potential to move the stock probably more than the actual financial report for Q2.
Yeah, and I guess I think EPS we beat by little. Margins I think we missed, but it can be okay as long as they can explain it away. And I'm really hoping for FSD talk and maybe this post earnings podcast. Maybe something happens with that, like they talked about. So
cool. I'm at 81 cents diluted EPS, and I think we might start seeing some lower costs on the auto side that might surprise. I think COGS might come down by more than people are expecting on a per unit basis. I'm hoping to see that. I'm seeing some lower price movements out of China. And one would think that all the inflation stuff that has gone away will start to kick in. So we'll see. I'm probably wrong, but doesn't hurt to. Yeah.
Can I just throw in a wild card? Buyback, perhaps? Talk about buyback and approval. I know Nico's laughing because I'm always talking about buybacks, but there's an off chance the Tesla board has approved buybacks and that they're permitted to buy, I don't know, 5 billion, something like that, 10 billion dollars worth of share buybacks throughout the rest of the year or the quarter or whatever they might do it. So just throwing that out there.
Fair enough. All right. So we're not just waiting for Tesla earnings. What I should do is instead of sharing my tab, I should share my screen. So y'all can see me switching between that's Tesla stock price and the earnings report. So if you're new to joining us, this is the point of the stream where we're all just patiently waiting for Tesla to release its earnings on their ir.tesla.com website. Once it's posted, everything will probably, this page is not going to work. And then you'll probably hear the folks on this panel start shouting out some numbers of what's coming in from everyone else getting the report before we did. And then once we finally get the report, we'll put it up and we'll walk through it. Definitely let us know in the comments what you think is going to happen here, what you expect for Tesla to report. And then there's also a poll at the top of the page. I believe if you're on my channel, on my stream, you can kind of see it at the top where we ask y'all what you think the stock's going to do tomorrow. So, do you guys get nervous? Go ahead, Yashu. Or Nico, who said that? Matt.
That was me. I was just going to
Sorry.
say, quick note, Netflix just dropped their numbers too, and they're down about 4%. It's been bouncing around. So it seems like they had a bad beat, which could be a
Okay.
bad sign for this earnings season in general, but that's a just quick little side note.
Okay. How often is there a correlation between when Netflix reports and when Tesla reports?
I don't think so. I think Netflix
No.
tends to be a little quicker, but
Okay.
Yeah, I don't think so. I think, and by the way, be careful with all the comments of people throwing in what EPS is coming. I've been fooled a couple of times on stream by people throwing in that stuff's out. So keep a watch on that.
Good call.
And I'm also refreshing in Canada, so our server's probably a little bit faster than you guys down south. So you never know if
Oh
they
my
get it
god,
for you.
I don't know what I'm doing here. I just completely messed this up. Hang on.
I'm north of
Shots
sharing.
fired.
Double sharing. All right, let me see if I can pull this up. Bradley Peterson. He's got a super chat. My God, this is why I need producer wife. I'm a mess. Bradley, I see your $19 super chat. I just want to give you a heads up. Which company is the best EV manufacturer and why is it Tesla? One word answers only. Because. Thank you so much for the $20 super chat. We'll make sure to give it to these guys once they come down to Austin. We'll buy them a beer each. Have you guys seen the earnings yet or no? We're still waiting.
Not yet. Not
Okay.
yet. Yes.
Supposedly 2 minutes.
Yeah, I think it's gonna be like 105-ish. Yeah. So whatever it will be, I know we'll probably get a CNBC article within 30 seconds with the headline pre-written. So, I guess we'll have that to read.
The article, I've been thinking about this. The article is Tesla earnings flat despite selling 50,000 more vehicles or something. It'll be something in that vein, I think.
I think it'll be like margins tank.
Oh yeah.
Yeah.
Despite the fact they're double, triple everyone else's, margins tank.
Margins tanked by 0.2%.
Or how about Tesla stock suffers as Elon gets in a ring with Zuckerberg later this year?
You guys should go work for those guys. If you haven't seen the last stream we did, so Matt is a phenomenal comedian, and he's going to do an impersonation for us on what Elon and Zach are going to say on the questions that are on Say. So make sure you stick around for that. It's going to be hilarious. Where's Emmett, by the way? Is Emmett joining us, Matt? Did he say? He said he was going to be on. I don't know.
I thought he said he was, but I don't know. Last time
Okay.
he was like going to an ice cream store with his kids when he joined. So I think he
yeah.
takes a more nonchalant approach to this than most people.
Got it.
He called
Perfect.
himself Chili, so maybe Chili will join a little bit later.
Chili. All right, we're refreshing. It's 4:05 Eastern, 3:05 Central, 1:05 Pacific, and we're waiting for this. Oh, somebody's saying it's up. Oh, there we go. All right.
It is indeed up.
9.6% operating margin, 2.4 billion GAAP operating income, 2.7 billion GAAP net income, 3.1 billion non-GAAP net income, operating cash flow of 3.1 billion, free cash flow of $1 billion, 0.7 billion increase in our cash and investments quarter over quarter. Cybertruck factory tooling on track, producing RC4 builds, so release candidate 4 builds. Model Y became the best-selling vehicle globally in Q1. Okay, so let's sit down and see. So revenues came in at 24.9. GAAP gross margin is down sequentially by let's see, 1.1% from 19.3 to 18.2. Operating margin is also down from 11.4% to 9.6. Let's see, and I'm going to start putting these numbers into my Excel spreadsheet here shortly so we can actually look at this. EBITDA margin is actually up sequentially from 18.3% to 18.7%. Where's that coming from?
I'm seeing energy is actually down slightly quarter over quarter on revenues, which is a big surprise to me.
Okay. Yeah, 1529 to 1509, so slight. Services and other revenue is down by about 300 million. Let's see. All right. Let me go down to their breakout by, and make sure everybody can see this, right? Yeah. Okay. I want to make sure this is up on the screen. Let's look at what the stock is doing. Stock is down 1.3% in after hours right now, so not a huge down movement. But as we go through this deck, we'll be able to. Where did it go? Okay. Here we go.
This looks pretty good on the surface.
Yeah, I agree. The earnings per share came in at 91 cents, adjusted earnings per share, which is pretty good. I'm trying to see if there was a big like where that beat's coming from. So I'm gonna keep digging into this.
Yeah,
If you see anything in the comments, make sure you share it. Yeah, go ahead, Josh. Sorry.
still a $600 million negative foreign exchange impact again this quarter.
You know, the nice thing is like reg credits are consistent at 567 million, which is it was 564 in Q1. So, you know, that's a nice indicator that it's not a low quality beat necessarily. It's not like they just, you know, doubled their reg credits because everyone likes to back those out. So that's I agree. I'm looking at this. I'm thinking this is actually like pretty good.
Yeah, free cash flow of a cool Billy. So total cash equivalents are 23.1 billion.
So even though their car gross margin is down sequentially, we're still able to generate more profit quarter over quarter, which is what helped them sort of publish a higher net income quarter over quarter. I'm just trying to see. Yeah. So the operating leverage really is kicking in here is what we're taking away from this at just a first glance. Would you guys agree with that?
Yeah, 10%, close to 10% operating margin. And they actually talk about this. They say our operating margin remained healthy at approximately 10%, even with price reductions in Q1, Q2. This reflects our ongoing cost reduction efforts, the continued production ramp success in Berlin and Texas, and strong performance of our energy and services and other businesses.
There's also a $328 million plus on the other income line, Matt. Have you ever seen this number before?
Yeah, that's interesting.
320.
What is that?
What is that coming from? Interesting.
That's a good catch. Yeah, I mean that's a big anomaly on that line.
Is that the one-time FSD impact, you think?
No, because that comes through automotive sales. It's possible like that could be. I don't know if that's where like Bitcoin would go. Like if maybe they sold some of their Bitcoin holdings at a gain from where it had been marked. That's potential. I don't see that anywhere though.
Okay.
Just a little quick theory. Digital assets net actually increased sequentially, so I don't think that would be the item.
Let's look at how. So the stock's actually up now 1.65% in after hours. So market seems to be liking this. Let me go ahead and read some of these pointers here on the screen. I'll try to make it as big as possible so y'all can read it with me. I do apologize if it's a little small. I'll try my best here. So revenue, total revenue grew 47% year over year in Q2 to 25 billion. Revenue was impacted by the following items. So growth in vehicle deliveries was positive. Growth in other parts of the business was positive. Reduced ASP year over year, so that's average selling price year over year, excluding foreign exchange impact, was negative, and foreign exchange impact of 0.6 billion, so 600 million, was also negative. Our operating income decreased slightly year over year to 2.4 billion, resulting in a 9.6% operating margin. Year over year, operating income was primarily impacted by the following items. To reduce ASP, they're still calling that as a negative. Cost of production ramp of 4680 sales and other related charges is a negative. Income and operating expenses driven by Cybertruck, AI, and other large projects. I believe this is the first time we're getting this line on the earnings report. So an increase in operating expenses driven by Cybertruck, AI, and other large projects. Negative Forex, positive growth in deliveries, which we've covered. Lower cost per vehicle, which includes lower raw material costs and IRA credit. So did they call it the IRA credit before, Matt, or is this the first time?
I don't think they actually explicitly called it that. I can pull up the other one just to check, but that seems to be new language. Yeah, they did not have IRA in Q1 letter, so that is definitely new language.
Okay. Gross profit growth in energy business as well as services and others. So they're calling out a gross profit growth in energy business. So we'll have to sit down and see what that looks like. And again, they're calling out mainly a free cash flow of $1 billion, partially offset by other financing activities, including debt repayments. And the cash equivalents and investments increased sequentially by 0.7 billion to 23.1. So they were still able to add cash to their balance sheet quarter over quarter. Let me go out to this Outlook page. On volume, we are planning to grow production as quickly as possible in alignment with the 50% compounded annual growth rate target we began guiding to in early 2021. In some years, we may grow faster and some We may grow slower depending on a number of factors. For 2023, we expect to remain ahead of the long-term 50% CAGR with around 1.8 million vehicles for the year. Cash, we have ample liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during this uncertain period. So they're calling out an uncertain period, which I'm assuming is tied to potential recession fears and what the Fed's doing with interest rates. Profit, while we continue to execute on innovations to reduce the cost of manufacturing operations, over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Interesting language there. And product, Cybertruck remains on track to begin initial production later this year at Gigafactory, Texas. In addition, we continue to make progress on our next generation platform. So I'll pause there and see if anybody has any thoughts. I'm not sure if you guys were able to go in and dig up some numbers. I'm going to try to do that on my end. Does anyone have any thoughts they want to share while I try to do some math here?
Sure. If you go one page back, just up, yeah, right there. So and yeah, go ahead, do your math. So the services and other businesses section is interesting. So they say the second quarter of 2023, the second quarter has been the quarter of supercharging. A significant number of companies, including Ford, GM, Mercedes, Nissan, blah blah blah, have adopted the North American charging standard. And then and they show the services and other gross margin graph, and they show that it's close to 10% now. Matt, do you know how much of a bottom line driver services currently is, and how much do you think it could be here? Not to put you on the spot, but
yeah, I was looking at something else, but it has historically been pretty small, just because the base of numbers is pretty small to begin with. So I think last year or last quarter it was 135 million in gross profit, and so it's like the overall base that it's like 1.8 billion in revenue Q1. So like that, I do expect that will grow. But I have a hard time with that line, to be honest with you. Just like thinking about how many F-150 Lightnings and Rivians there are out there relative to the size of the Tesla fleet, it seems like it's relatively small to me. So for that to be like a big driver of revenue and eventually margin, seems like that would just take a slow burn. I think to me the bigger thing on this side is like the sale price for the used vehicles that they sell, which especially when you consider the cars coming off lease that they have coming through. That's where that line hits, the services line as well. So like all the initial Model 3s that were leased in 2019, 2020. I think 2020 is actually when they introduced it. Those are coming off lease now, so Tesla can sell them for a profit. But with used car prices down, I think that's hurt a bit in Q2, I would think.
Hey, Farzad, can you go to the installed annual vehicle capacity?
Where? What page is that? Oh, here. This guy?
Yep. Notice on the next gen platform on the left, it says various now. So that's confirmation. That's new.
Interesting. So it's not just a Mexico thing. It's going to be in multiple facilities. Good catch. Sorry, go ahead, please.
I was just going to say, I mean, I think we all knew that, but, it's nice to see it confirmed that they're looking at that various. I think there's rumors, in Austin as well. So I think it's exciting.
Real quick, the math I did. So even though energy was down sequentially, margins are up to 18.4% from 11% on energy. So it looks like in this quarter, they spent some time to maybe get their processes down pat, and they were able to raise their margins by about 600 basis points, roughly, more actually.
It could also be just the type of products that they were able to recognize the revenue on. So they have significantly increased the price of Megapack over the last couple quarters or years. Sorry, it was originally going for about $350 per kilowatt hour. Now it's more like $500 if you include installation, maybe $450 without. So it depends in any given quarter if you're recognizing revenue from an older order, that was at that lower price point. That's going to have a big difference once you start rolling those off and you get to the higher price point, $500 per kilowatt hour Megapacks. So hopefully this is kind of like more like the new normal level, because I think I was not expecting 18% gross margins. It's actually funny. I was expecting a lot more revenue growth, but they actually had revenue growth that was essentially flat. but still beat my gross margin expectations because like the costs were so much lower than what I was expecting. So that's certainly a good sign. And I think I would rather see that than than like slightly more aggressive top line growth, because we already know the pipeline's so strong. The fact that like we might need to start revising our energy margins upward if they can do this this high of a margin with essentially flat deployments. That's
Any
a
other
very
thoughts?
good sign the more I'm thinking about it.
Yeah, I agree.
Yeah, and that line of in the energy storage paragraph, they say the ramp of this 40 gigawatt hour mega factory, the first of many, has been successful with still more room to reach full capacity.
What page was this?
This is page 9. And then they say, while energy storage deployment rate can be volatile due to project timing, production rate improved further sequentially in quarter 2. So they talk a little bit about why perhaps they might have had a little bit of a bumpy quarter for energy revenues.
Yeah.
And then just a question for you, Matt. How does the margin work? Are they basically dividing the revenue recognized this quarter by the cost of manufacturing for this quarter? Like, how does the revenue recognition and the manufacturing, like the delay in those two things, affect margin?
So any mega pack that they built, let's say they built a mega pack a year ago and it just got deployed this quarter, so it's like the revenues recognized this quarter. The costs that they incurred a year ago to make that mega pack, they got put into inventory at the time on the balance sheet. And then once the revenue is recognized, those costs come out of inventory and they go into cost of goods sold. So any revenue recognized for a particular project reflects more like the historic cost basis and pricing that was there. It's not like it's not a necessarily an accurate reflection of exactly what is the profitability of the Lathrop factory today, because it's the things are locked. The costs are locked in with the time of the product that was built.
Let us know if you're seeing anything else. Nico, I see you published a link in the private chat. Is that something
that's CNBC's title, just since we were talking about it. But I did.
Oh, okay.
I know we're all talking about numbers here. I'm going to be the child here. If you look at the report and go down to the pictures, there's one where the Cybertruck is covered in mud, and I kind of feel like this is a shot to Jim Farley. They label it Cybertruck, built to do real work.
Oh, totally. Yeah, if you're not familiar, Farley was out there saying that this car, the F-150 is built for like real people. You know what's even more interesting? We can see the radius of the wiper. Look, it's like this portion of the windshield is not being wiped unless there's like something else going on. I find that interesting.
Good point.
I find that interesting. So we'll see. We'll see what happens there. That's funny though. That's pretty funny. What else? Is there anything else we want to hit up on the earnings deck here? I know Alexandra's going to join us here shortly as well to give us her thoughts on what's going on. Let me browse through some of the pictures here.
Seems pretty benign, doesn't it? Nothing crazy.
Production line at Gigafactory, Texas. So that's interesting. So we have a Cybertruck obviously being it's covered up, and it's so it looks like the line is there. They've built out the line.
It looks to me that it's missing equipment though, and I have heard that from some people that are suppliers, that they don't have all of our equipment that's destined for that line yet. So to me, this is a kind of point consistent with Yashu's expectations for later kind of delivery. My suspicion, like if you looked at that picture that they showed, Taylor Ogan actually pointed this out. I thought it was a good point, even though he drives me nuts sometimes. But the Cybertruck didn't have a driver's side door. Like you could see the people behind it. And so to me, it's like this was probably a hand built, mostly like prototype, as opposed to like something that was like validated by all the equipment that's going to be on the process eventually. Because I know there's definitely equipment missing, and it does look like that just based on how much open space there is on the side of it.
I think there was a door. It was just open. and people were
was
were
it? Okay,
standing
so
next to it.
maybe I misinterpreted that, but the broader point I think still holds,
Sure.
is at least the theory does.
You're falling for the FUD, Matt. Come on now.
That's why you got community notes.
BYD for life.
Here we got more pictures of Cybertruck. Sorry, Yash, go ahead.
No, nothing. I was just talking. I saw the Bitcoin people talking about Tesla still holding Bitcoin. So there's that side of the crowd that's still excited about that.
Okay. Yeah. So here's the picture. Maybe the door's right here. You can see it. Right? Or is it the guy's shirt? No, because you would have been able to see his vest. So it looks like there's a door.
That guy's leg, to me, it doesn't look like there's a door there. Like looking at that one guy's leg that you can see kind of by the steering wheel, there's either no door or it's open at such a strange angle that you can't see it.
It looks like that guy's arm is resting on something, though, don't you think? Right here. Almost looks like there's a door. Anyway. Door gate. Oh God.
Door gate.
There we go.
You're right. And there's no door, so they're not going to make it.
Yeah, so fake product.
Yeah.
I think it's
CGI.
I think it's quite good that if this was going to be kind of the bottom of the barrel Tesla report, and if you talk about zooming out in this landscape of ugly macro interest rate environment, price cuts continue to happen, low cost efficiency still with factories ramping up. I mean, could we agree that this quarter would probably be the bottom for Tesla margins and it's up from here? Or is there a risk that Tesla has to continue to cut prices here to be able to hit their unit numbers? What do you guys think?
I mean, there's always a risk, but it does seem that orders have stabilized based on all the indicators that you can kind of see publicly. I know Tesla's been kind of adjusting those a little bit, but I mean, if you believe what they were saying on the last earnings call, that the order rate is actually above their production rate, that seems to be consistent. And we've seen a couple of very small price increases in a couple different geographies since then. So it seems most likely to me that we've reached a relative point of stability, and then from here you can kind of march up that kind of operating leverage, and you get more scale, so you get lower cost of goods sold, and your gross margin increases. I mean, that was the train that we were on for like a good 5 years there. Then price cuts kind of knocked us off, and I feel like we're kind of back on that horse of increasing margins going forward. So I would be surprised if we don't increase gross margins going forward.
I agree with that. Real quick on that Bitcoin line. Yeah, digital assets net, it's at 184 and it's held steady since the second quarter. So they haven't really touched their Bitcoin.
And there's a big jump in OpEx this quarter, 1.8 to 2.1. Is that, let me see, is that broken down so we can see where the majority of that uptick came from?
It's mostly R&D.
R&D. Okay. So is that Cybertruck or AI R&D, you think? I guess it's no way to know, but
I think it's NVIDIA GPUs, probably H100s.
I was going to say, I think it's a little bit of everything, but I would say a big part of it is probably Dojo.
Yeah. Yeah, so it's an uptick of 300 million kind of ish, $300 million quarter over quarter.
Yeah, quite significant.
Yeah. Yeah, the services and other line is interesting, man. Like that one is kind of that's a big jump from 18.3 to 21.5, or to 1.83 to 2.15. That's 300 million increase in services and other revenue. And we highlighted it in the other chart. You were talking about this guy, services and other gross margins. I mean, they're not only making more money from services and other, but they're also, their margins are increasing sequentially.
Yeah, I got a question on that.
Yeah.
For the smarter people here. With the supercharging network, does that fall under services and other, or does that consider under energy? It does. Okay, so with higher utilization of supercharge, I mean, I drove up to Boston with my wife, and they were never full ever. I never waited. They were empty half the time. So higher utilization, I mean, I would imagine that's going to make that line just look a lot better over time, rather than this fear everybody has of, Tesla losing their moat. I mean, how do you guys think about that?
Yeah, I definitely think that's going to be the case. I mean, if you think of what's going to drive revenue in that part of the business, it's the growth of the cumulative fleet, and how many miles are people driving. So I do think that that's going to continue to grow at a pretty aggressive rate, especially as we're opening this up to other networks. The one thing I was trying to check the math on is, and I wish I had it prepared, is what was the change in leased vehicles in Q1 of 2020 compared to Q2 of 2020, because that gives you a good indication of the change in services revenue, because a lot of those vehicles that were coming off lease are just going to be sold by Tesla then, and as used vehicles, and that's where that hits too.
Real quick, let me read this line from Artificial Intelligence Software and Hardware from page 8. 4 main technology pillars are needed to solve vehicle autonomy at scale: extremely large real-world data set, neural net training, vehicle hardware, and vehicle software. We are developing each of these pillars in-house. This month, we are taking a step towards faster and cheaper neural net training with the start of production of our Dojo training computer. And they have it next to the graph with the Dojo thing going up. And they've also reshared this graph on the lower right-hand side that highlights the teraflop or the exaflop increase in compute. That was something that they also shared on their the Twitter account a while ago, just to highlight that. What else? Any other thoughts on the deck?
Well, it's going to be interesting to see how Tesla Q spins the R&D thing, because if you think about it, they all they ever say is, well, for Tesla to do all this stuff, how are they only investing so little in R&D? And if any legit company was serious about this stuff, they'd be investing more in R&D. And I bet you the same people now are going to twist this narrative around and say, well, look at Tesla's OpEx. It's crazy high. R&D, they're sucking all this money out. So it's going to be interesting to see how this spins. But I would love to get Elon's insight into R&D specifically, and the uptick there. And is this a continual uptick? Like, is it a one-time thing where they buy all these chips, or is it hey, we foresee this cost increasing still?
I was going to say, just from an accounting perspective, I would be very surprised if this did reflect like actual purchases of like NVIDIA chips. I don't know the exact treatment around this, but my strong suspicion would be that those purchases would be capitalized and depreciated over time. So I would expect that shows up in your investing cash outflows as opposed to hitting the OpEx line right there. And then over time, as you use them, then I would expect that depreciation to hit, and for it to show up in SG&A that way through depreciation, rather than, hey, we bought a boatload of new chips this quarter, so it like hits in a lumpy fashion this quarter. That's just, generally speaking, that's not the way that would be treated, I don't think.
Would you say the same thing for Dojo production?
Well, I mean, for costs associated with getting the program up and running, those would be like expenses. But if you're like actually building, there's a little bit of gray area here, and I think they even mentioned it, like in the Cybertruck line, some of those startup expenses with getting the line going are actually in SG&A as opposed to being capitalized. Sorry, I think it's the other way around. Some of those expenses are being capitalized, I believe, as opposed to running through SG&A. But then once you get to production, then it all becomes expense generally. There's always some wiggle room in this, and without knowing every individual decision that's being made, it's hard to kind of be overly specific. But I think it's safe to say that like they're probably hiring a ton more like very expensive, like highly paid AI people, and I would imagine those are like going to stick around to stay. We know they're for sure using a lot more electricity in like their compute clusters, in their GPU clusters. So like that's going to be there to stay. And then like any R&D related expenses for actually getting the Dojo chip like up and running, and like everything associated with getting that, I think a lot of that's going to be just inefficiencies that'll are probably going to be expensed right now.
Makes sense. Yeah, that totally makes sense. And one last thing, I have to sign off here, but the stream will keep going. One last thing I'll say is SG&A. So we talk about Tesla advertising, and Tesla finally has started to run Google ads, verified this quarter. So SG&A line, that's gone from about 1.07 billion to 1.2 almost billion. So of course, uptick from last quarter, and decently so year over year as well. Interesting to see maybe Tesla or Elon or Zach or someone talk about what they foresee as their budget for advertising moving forward. Can't imagine it'd be a lot because they haven't put out video ads or anything like that yet, just text. But it'll be interesting to see. Great stream. Thanks, guys. Keep it going. I'll keep watching, but I have to sign off here. Much love.
Awesome, man. Thanks for jumping on. Something that was interesting, I can't recall if we mentioned this, but inventory is actually relatively flat quarter over quarter. So 14.3 billion previous quarter, 14.3 billion this quarter. So they were talking about ending the wave, and they had a little bit of a blurb on the one of the earlier pages, and it looks like the value of the inventory has held steady. This isn't like units, this is dollars, just for those that are following. But I find that interesting. So I wonder if there's going to be any sort of, there's been a lot of like concerns from the bear side, or they're bringing up these things that, hey, look, they can't sell inventory. They're stuck with a bunch of inventory. But it's actually been flat quarter over quarter, especially with their higher deliveries in second Q. So
that doesn't make a whole lot of sense to me, since their production number was significantly higher than their delivery number for the quarter. So how does that work? I guess, is it just
producing low in COGS, maybe producing at lower COGS?
Yes.
Right. And just that, I guess that would be like, if they have more cars in inventory, but the cost is the same, those are going to be the cars that are going to be sold next quarter. So maybe that's what we see, like maybe a margin surprise next
or maybe
quarter.
They delivered almost all of their, like if they had significant SNX inventory last quarter and they were able to clear through all SNX this quarter, maybe.
That's a good point, because they delivered twice as many SNXs this quarter than the previous quarter.
Although their SNX production was actually still higher than their delivery, I believe, or at least it was very close. So I don't think that should be driving a big change. I would say that the other thing to keep in mind is that that's all inventory for all parts of their business. So like it could be that there was a significant deployment of megapacks, for example. And so those come out of inventory like we were talking about. And if those were like higher COGS inventory from the Giga Nevada plant, for example, and you're just getting those off the balance sheet now, that could be kind of an outsized reduction in the balance sheet. Now, that given the magnitude of that difference, I don't think megapacks would account for that whole thing. So I think it's probably a lot more than just that. But that does surprise me also. But if it was a leading indicator of kind of lower cost of goods sold going forward, that would definitely be good news. Probably a little bit too hard to extrapolate from that one data point, though. Got to wait for the Q where they break some of this out in more detail.
I guess the good thing from it is that they're just a smaller percentage of their cash is in inventory relative to their bank account, basically. So they're being more efficient with their deployment of cash, and there's not an inventory; it's just sitting in their bank account. I guess is the overall takeaway here. Okay. Any other highlights we want to take from the deck before we maybe start getting ready for the call? Any thoughts on the deck?
I did just have another question for Matt. Do referrals come out of their advertising budget, or is that out of SG&A?
That's a good question, actually. I'm not entirely sure. You could probably argue that it would be like a cost of the product, so maybe it could go in COGS. But if I mean, it probably also depends on what the referral bonus is. So I would think it probably comes out of COGS, or is recognized by like a lower revenue recognition. Like if you got like a free power wall or something like that. That's a good question. I'm not sure exactly.
All right. Thank you all for joining us on this wonderful earnings day. Let me pull up the stock price. We're looking quite flat in after hours. I mean, I think the overall tone of this earnings report, at least, just seems like, okay, a little bit better than expected. Nothing really, doesn't seem like there's any alarm bells going off from anybody. It looks like there was a little bit lower margin, which a lot of us expected. There was a look at, wow, this stream just got so much more beautiful all of a sudden. My God, what happened? Holy moly!
How are y'all doing, guys?
Great. before I keep rambling on, let me hand it over to you. So you've had a solid half an hour to digest the earnings. I was just saying
I
that
need
it
that.
seems like, yeah, I was just saying that it looks like it just, we were all talking about this before. It doesn't seem like anything too crazy, kind of in line with expectations. Well, what are your thoughts?
Yeah, that's exactly it. I hope I didn't interrupt anybody.
No.
So yeah, it took me a little bit of time, and there was always 5 other things happening at the same time. Isn't it crazy when something's happening, so many other things have to happen at the same
Sure.
time, including Elon answering to one of my tweets. I was like, can I believe it? In the middle of earnings. So there we go. So my thought is this has, as is, no impact on the stock price or on anything, right? We're on track. The things that are less than I expected are all explainable. The ramp of the 4680, the ramp of the Cybertruck, the money they're pouring into AI. So those were higher expenses than I thought we would expect, but it's for good cause and it's only temporary. Inventory was for me a real good positive, only 16 days. Not that I was ever worried about inventory, but that should really put a whole. I mean, if I see another of those inventory charts from those Tesla Q, I'm just going to explode, right? So because inventory is not the problem, right? Free cash flow has recovered. Remember 3 months ago, that was my first point when I joined 3 months ago, where I was like, oh, I don't like the free cash flow number. It's good. What I really liked is the lower cost per car. We are on the good way for cost reduction. Energy storage a bit less, but I mean, Matt can explain to us. I mean, accounting for energy storage is just so complicated, right? The megawatts deployed is a bit lower than I expected, but again, I have no grip yet on how stable energy storage should grow, or whether we just have to account for all those variables from quarter over quarter. What I'm always surprised on is their Forex comments. Like, again, they put it in the negatives, but a couple of lines below, they say, well, in certain countries, it was actually a net positive. So I don't get their currency management. I mean, it's actually funny because 25 years ago, like half my life ago, I started being a currency Forex trader. That's how I got into banking. And I look at that and I think I should understand that. And then every time I look at the Tesla financials, I'm like, I don't understand why they're saying it's a negative when I expected a positive, or the other way around. But I mean, there I am. If ever I can talk to anybody there that explains me that, I'll be most happy. But overall, just smooth sailing. What is lower than expected can all be explained with actually, good, solid reasons. And everything else now depends on the earnings call and what they're going to tell us. And I hope that Elon is in as good a mood as he seemed to have been all morning.
Any reactions to Alexandra's commentary from anybody on the call? These earnings. Go ahead, Matt.
Yeah, so I was just gonna maybe touch on the one point that you posed to me on megapacks. It's like impossible to kind of project how this is going to come quarter over quarter. I mean, I built out like a very detailed model which kind of built in like a revenue recognition lag and how many megapacks would be built versus deployed versus recognized out in the field. But you're just grasping at all those assumptions, and so if you imagine they're doing some big 6 gigawatt hour deployment, which they have some that are that size, then when that hits is going to make it almost impossible. So I guess my thoughts around this would be let's watch the trailing 12-month trend over time and see how that kind of looks, because it should be incredibly positive, but this quarter over quarter lumpiness is just impossible. I really understand this stuff, and we don't have enough information to get there. One other thing I noted, Farzad, you were asking about that other income line, how that was what was it, 200 to 300 million?
329, I think.
Yeah, so they have a note in here that says other income below operating income line was positively impacted by FX movements on certain intercompany balances. So that's kind of a strange one. I'm not sure what was driving that. I mean, that could be one Tesla Q kind of picks apart as, you're artificially inflating your business, but it's okay, $200 million. Go find something else to complain about.
Yeah, and didn't you like the fact that we're now close to 25 billion of sales per quarter? I mean, this is just such a horrendous number. This morning I retweeted somebody who said, well, they're looking forward when revenues will be $1 trillion per year. And then I had obviously some people saying, oh, it's already $1 trillion. No, it's close to $1 trillion in market cap, not in revenues. So if we extrapolate just this quarter, which obviously is only Q2, Q3 and 4 will be higher, but that would mean 100 billion per year. So a trillion will be 10 times that, and we'll get there. There is no doubt we'll get there. But it's just it gives me a lot of baume au cœur on my heart. Sorry, I start speaking French, getting all these emotions. But I mean, the 25 billion I think is a real good milestone. I mean, it's a really important milestone, and we should celebrate it.
Did we also talk about interest income is continuing to increase? Was that something we hit on to 238 million?
Yeah, and I think they went heavily into T-bills again. I have that somewhere. Let me find it.
I would say while she's looking that up, that's not necessarily a huge surprise. I mean, just it's mostly a function of their cash balance and the higher interest rate environment. So that's why we've seen it really kick up in the last couple of quarters. So nothing that's a surprise, I don't think, for this quarter.
Exactly. I mean, it went from barely 3 billion to now close to 3.5 for everything that's cash equivalents investment. So that's all that short-term stuff. And I mean, short-term rates are still quite important. And we did move up by nearly 1 billion in cash reserves. So I do believe that that's the reason why it was well managed. I also felt, wasn't it, that accounts receivable went down a little tiny bit. I mean, nothing really important. There was a question this morning actually on Twitter: what happened to those 700 and something million that Reuters announced were given back in stock options? I think these were reintegrated there. I didn't have the time really to find where they should be. If I understood it right, it should be in the operating expense where they reappear. I'm not sure where they are, so I have to dig a little bit further to understand. Didn't you love that second Cybertruck image? The one in the dirt. I was like,
The one thing that the wiper doesn't go all the way. It doesn't cover like 1/3 of the windscreen.
Did you talk about the missing door?
Oh yeah, Doorgate. We talked about Doorgate.
It is, right?
Yeah.
Where's the door? Where is the wiper?
So funny. So what I'm doing right now is I'm just putting all the numbers into my spreadsheet just to make sure they all align.
Yeah, so Farzad, while you do that, and I got all these brilliant people on here, there's been I don't want to call anyone out, but there's been someone who's very reputable in this type of space, financial YouTuber, who has talked about Tesla needing to go back to the capital markets. And I was privately talking to like James Stevenson to better understand this, because to me, it doesn't seem like they have to, from everything that I understand. He seems to agree. Tesla, in the earnings call or in earnings report, they say that they have enough cash to fund everything they're trying to do. So, with Alexandra and Matt, could you help me understand what I might be missing on that front? Or if you have no idea what I'm talking about, we can just move on.
I don't know who you're talking about, but let me address what we have. So we have now 23 billion in cash, right? I know there was another, maybe it's the same YouTuber going on. Yeah, but that's only temporary cash because they have all these obligations to pay their suppliers. I mean, that's crap, because there's constantly money coming in and coming out. So this is just, holding it at one moment, and that's 23 billion. So you can't just take this 23 and deduct all the rest, because by the time you deduct all the rest, there's more money coming in. So just don't get confused by that. That's the first one. The second is, last quarter, I think it was, they had that new credit line. Maybe wrong, remember that, but I think it's with Citibank now, right? I think it was with Deutsche Bank and they changed it to Citibank. So that's a credit line that they can pull at any moment. Obviously, at the moment, they are not. I think it was very wise to have put that in place, and it was at stellar, more than AAA conditions. The third thing they are now looking at, what came out last week, is doing an asset-backed security. They've done an asset-backed security before. What is that? That is a pool of all the leases they currently hold, and taking it out of the current balance sheet to put it into that asset-backed security that then the market can purchase, or even retail investors can purchase, so that it's off this balance sheet. And then so the risk is not with Tesla anymore. I think that's actually a very clever move. Why? I've discussed this before. I think Tesla, sorry, my English, pissed off a couple of banks by lowering prices so radically. Why? Because a bank has lended, let's say 6 or 8 months ago, for a car at a certain price, asking the owner of the new car to put down whatever, 5%, 10%, 20%, and taking the rest on the bank's books. When then suddenly the prices of all these models dropped abruptly, the bank has an issue. The bank needs to readjust their books because now they're holding suddenly 100% of the car value, and they have to, so they're having this loss. And a lot of banks don't like that because they have to readjust if they don't do it linear. And if they do it linear, well, then it becomes untradeable. So by doing this asset-backed security for leases, and they may actually be able to do it also for car loans in a second time or in the same vehicle, I have to look into it. But that is to be able to circumstance those banks that are less willing to finance Tesla cars just because they have it in the stomach at the moment, to be able to direct these, to first take them on their own balance sheet, but then to direct these into these asset-backed securities. So none of this is bad credit risk for Tesla. Actually, all of it is Tesla being treated as a AAA entity by these banks, by these swap desks, and whoever else puts these up. So don't get confused with the old rating agencies trying to tell you something else. This is really what shows the stellar financials and situation that Tesla is in.
And
Matt, you want to
do we
add something?
still have a negative cash conversion cycle so that they're actually getting paid for their vehicles before they're paying all their suppliers for parts?
I think so, right? I mean, I don't know how long, with 16 days of inventory, I don't know whether that is still as favorable as it was in the good old days. But I mean, 16 days is short, and usually I think they have 30 days to pay, right?
Yeah, I think it's got to be because if as you continue to grow, if you're generating operating cash flow while you're growing top line, that means that implies a negative cash conversion cycle. So I would suspect that has to be the case.
I
We
thought
got
you were on
guys.
vacation with your kids.
Oh, thanks. Yeah. How you guys doing? Yeah. How's everything going? Great discussion. I've been listening. You guys are on the ball. Matt, what were your thoughts on I might have missed it, but the gross margin 18.7 or 8%, I think. What was your impression on that number? Have you been able to dive into that a little bit to try to estimate the IRA credits or anything in that?
So are you talking about the energy side in particular, or automotive, or total?
Automotive, yeah. Primarily automotive, yeah. I guess the total
so I think
is
it was
18 point something, right?
Well, I think it was like 19.2 on the automotive side, including regulatory credits.
Okay.
Which was slightly lower than I was expecting, but like pretty much in line. I mean, they beat a little bit on energy gross margin. They beat a little bit on services gross margin. There was some other kind of positives below the line in other income that helped boost the adjusted EPS to be a pretty sizable, like what is it, like a 10-cent beat? I think 91 cents. Consensus was at 81, I think. So pretty strong quarter, but also relatively in line with what I thought. I mean, the stock's basically flat after hours, and that's kind of what I would expect with this. So yeah, pretty solid quarter. I mean, I think the attention's just going to shift to the outlook and like what is Elon's mood, and what what are we going to talk about in this earnings call, which we were saying before the report came out. We think that's probably more important than these quarterly numbers anyways. I mean, we all expected this to be a trough. Looks like this is going to be a local trough. So the guidance from here, I think, is what's going to be much more important to valuation and the stock price and narrative.
Yeah.
Didn't you find the regulatory credits quite low? Because I mean, I was looking at the competition, and they just didn't perform, right? So I would have expected that they were able to sell, just as a direct line deduction, more, and it's a half of last quarter, right? It's lower than Q3 2022, which was a low one.
It wasn't lower than last quarter, was it? I mean, it was.
Yeah, last quarter was 521, and now 282.
Oh, it was 282? I must have looked at the wrong thing. I thought it was in the $500 million range. So that's I guess the hazard of doing this.
282.
Oh yeah, well, that does surprise me then. Yeah, I must have been looking at the line right below that, the automotive leasing. Yeah, that's a big surprise to me, actually. I definitely would have expected that to be in the $500 million range.
Exactly, me too. I mean, looking at, and I was actually making a comment a couple of days ago, expecting it to be higher, and this proves me wrong. So that's surprising, because I wonder who else would get them, right? I just don't see anybody else producing enough to be a good counterparty for all these people who have to buy them.
It's hard to see on the pricing. And the other thing I've noted on these in the past is the accounting on these. If they're anything like renewable energy credits in the energy space, is really bizarre. I mean, that was something when my company that I used to work for was managing earnings. Like December 20th, I'd say, do you want earnings this year or next? Because we could take basically a whole year's regulatory credits and pump them into one calendar year or the other based on how the earnings for that particular year were looking. So I suspect there's some similar sort of wiggle room that Tesla and these other companies have as far as when it's recognized.
Which
Emmett,
also
what are you-
would then mean,
Oh.
excuse me, sorry, Faza, which also would then mean they didn't feel the need to stuff it more here, right?
Yeah, it would. I mean, and that makes sense to me given the strength of this report overall. I mean, they weren't scraping for pennies to, try to make the report
Exactly.
look a little bit better than
Clearly
they
not.
were. So they didn't need that. And I
Clearly
think the other thing, I'm trying to remember his call, but I think on the Q4 call, Zach Kirkhorn said something to the effect of the guiding for like 2 billion in credits for the full year, somewhere in that neighborhood, which, you did the math and it was, roughly 500 to 600 million a quarter. So I'd have to go back and see exactly what he said about that, but that definitely does surprise me.
Emmett, what are your thoughts? What's going through your mind? Did it match your expectations, beat them? Let us know.
No, it matches my expectations. No big red flag that I could tell. I feel like if the gross margins were like something closer to what Pierre Ferragu was estimating or lower, I'd be like, oh, hopefully the stock's not going to take too much of a hit, But I feel like this is kind of a middle of the road, like expectation met earnings, and the stock is pretty bland after that report. It's pretty boring, which is probably a good thing if you're a long-term investor, I would say, and for sure. And I'm most interested. I hope they get to the question. I mean, I didn't submit any questions today, so I'm not advocating. We're not supposed to advocate, but there's a question about the Optimus bot, and I'm really hoping they get. I think it's like number 6 or 7. I hope they get to that question because, to me, as a longer-term investor, my personal shares and such, like that's like the real deal here of getting a huge valuation jump again. So. The FSD, all that stuff is coming to fruition. There's tons of questions about that these days, which is good, but we don't hear a lot of questions being answered lately about the Optimus bot. So I hope we get some more clarity on that maybe in the call. Maybe maybe that question will come up. What do you guys think? Any thoughts on the Optimus bot?
I mean, I'm hoping that they do the post earnings call podcast or whatever, like they mentioned during the shareholder meeting. I think that would answer a lot of our questions and kind of whet our appetite for the people who want to go more technical, deeper. So topics. So
yeah, from my standpoint, I we were discussing it briefly on the call, but I do think I'm at the point where it's more I want to wait and actually see it in action. I'm trying to lower my expectations if it pertains to things like FSD, Optimus bot. These for me are obviously going to be the great value creation storylines for Tesla long term. But for them to actually come to fruition, I'd love for them to actually be demonstrating the technology. So me getting an update for FSD that's V12 that I'm literally just can conceivably fall asleep and not have to worry about it, or a video of the bot working at the factory putting something in the car instead of like a demo, which is, I mean, listen, technology is fantastic and it's super exciting. But I think that's how I'm trying to temper my expectations because I'm naturally so excited for the technology. But yeah, that's kind of where my head is at with that. Yeah.
I want to know, Emmett, did you steal my haircut? Was this intentional? It looks like you're my twin now a little bit, although you still got the buff shoulders.
I know. I got a haircut recently, a little short, maybe it's a little, I think they saw the screenshot of my phone that had your portrait on it and they thought I wanted to look like that. So they started cutting my hair that way,
That's
poor
hilarious.
Judgment. Very.
Yeah.
Real quick, for those that are tuning in, it's 4:56 Eastern. The earnings call will start at 5:30 Eastern time, 4:30 Central, 2:30 Pacific. Before the call starts, however, we're going to start a tradition. We did it last quarter, and Matt, if we can do this every quarter, that would be fantastic. Maybe we can do this in the next a few minutes here. Matt has a phenomenal impression of Elon Musk and Zachary Kirkhorn, especially Zach. And maybe we can ask Matt some questions
Yes.
and see what kind of answers we get. And then we'll compare the answers side by side tomorrow and see how close. Because last quarter, Matt, you were nailing the answers. I mean, they were perfect.
That
not
was a
just in
little
tone.
surprising. I do think the expectations may be a little too high. I have not done this impression at all since last quarter. So
But
I'm a little bit worried. It might have been a fluke one-time benefit, but we can give it a go.
I want to point out a quick correlation causation. Ever since Matt started doing that, we've been kind of on a tear here. So just saying, if you stop
We should
now,
do it twice as long this time.
Yeah.
Should we do it? Should we do a couple now? Are you feeling up for it, Matt? What do you think to get the crowd warmed up?
Not exactly, but you can. I mean, got to jump in with 2 feet at some point. So
all right. Well, I think Emma, were you reading the questions last time? Do you want to?
Yeah.
Do the honor?
I was Martin Vieca. Yes, or not Martin Vieca. Whoever the guy is, I forget that runs the call and reads the question.
I have Say Up, so let me know what question you're looking at.
Okay.
I'll pull up the questions in tandem.
I have Say Up 2 here, so let's go to let's go to the fifth question down. No, the fourth question down. All right, here we go. This is a Matt type of banter question. This is what if someone on our old live streams would ask, I'd be like, Matt, you take it. All right, here we go. And Elon, all right. We have another question here is, could you quantify the benefits to COGS unit from A, IRA battery manufacturing incentives, and B, battery new raw material declines year to date?
Yeah, Zach, do you want to take that one? It's kind of boring. So do you want to take it? Yeah, sure. So the IRA credits, there's pretty clear credits in there for the battery pack. So that's, $49 a kilowatt hour as long as it's manufactured domestically. So that'd be like the 4680 cells. That's going to be the minority of our cells. And again, that's only for US based manufacturing. For the plants or for the products that are coming from Giga Nevada, where you do have the old 2170 cells, they wouldn't qualify for the full amount, but they still do get the $10 per kilowatt hour pack credit. So you're going to have a little bit of benefit on that side. And so when you do the math, I mean, it's meaningfully helpful, although I would say it's not going to really drive the value. What I would encourage people to do, however, is to think about as we continue to roll out our U.S. manufacturing base. I mean, we announced our Giga Nevada plant that has 100 gigawatt hours of capacity on top of our existing lines in Giga Austin, which are going to continue to expand. And so if you look at the full $49 per credit, $49 per kilowatt hour credit that we're going to give on the 100 gigawatt hours of capacity at that plant, becomes a really meaningful margin value. So I'd focus less on the near term and really think about what the medium to longer term benefits are going to be from the IRA on top of the benefits from subsidizing demand on the consumer side. So a bit of demand pull forward. That's how I would think about it. Farzad, are you okay?
And Elon, or maybe this is better for Elon. The next question comes from Brian K. Asks, have you considered allowing FSD transferability as a lever to allow existing customers to upgrade to new Tesla instead of being locked in to existing cars due to the price of FSD?
Yeah, I think there's some misperceptions around the practices that we have on trade-ins around FSD. We actually do give credit on FSD for trade-ins. If I have not yet purchased FSD, but I come in with an offer, I want to sell my car to get another one, and then I purchase it and then offer that same car in, you're going to get a higher price from Tesla. So this is maybe more of a communication issue on our side than anything else. So, but maybe more importantly, I would encourage consumers, don't sell your car with FSD. If you truly believe in this technology, the value of holding on to that car is just so much more profound than trying to sell it and upgrade for, you know, like a slightly better interior, slightly better range to get on one of the current cars coming off our line. Really, the financially optimum decision would be to hold on to that one, and maybe even buy another one with FSD, because the step change in value that these assets are going to undersee in a relatively short amount of time, I think is going to be quite profound. And so I think anyone trying to get a slightly better trade-in value on our vehicles is really missing the forest for the trees on this. So I think something fell off with my Elon accent there.
You're doing good. You're doing good. And we got one more, Elon, on the say.com before we move on to the analysts. Michael G asks a little bit further down, with the emphasis on price cuts to drive volume growth eating into automotive gross margin, can investors expect to see automotive gross margins stabilize or even rise due to efficiencies outpacing the cuts? And if so, when?
Yeah, I mean, I think one of the things that people don't appreciate is the benefits of manufacturing at scale. This is, I've been saying for many years, and people thought I was crazy at the time, but I think the truth has been borne out in the sense that manufacturing is going to be Tesla's long-term sustainable advantage. You know, when things were a little bit crazy the last couple of years, we were posting best-in-class automotive margins by, I want to say, almost double what Toyota was doing, which Toyota was the gold standard when Tesla was just a young child. So they told us that was the best we could do, and we doubled it. And we're not stopping. And so this is where the pace of innovation is really going to be our long-term sustainable advantage, and frankly, something that is going to continue to be underestimated, I believe. So yes, we are continuing to drive down costs. I think we've been very clear on that. And I think you would ignore us when we give you that guidance at your own peril. I probably should have practiced, because my something about my accent's been gone.
No, those were great.
I think that's just amazing. It's just amazing. The fact that you can just nail, yeah. It's like you almost tap into his brain and forget the accent. Like it sounds like him. It sounds like what he's saying, you know?
My favorite part is I think, because he does that all the time.
The break.
Yeah, the pause is the best.
The stutter. Yeah. I think your brain is you pull a switch in your brain where it starts acting in a similar process to Elon for producing sentences and thoughts. So it mimics his stutter and all that stuff. It's just something special there. You know, we gotta practice it and get it. Every quarter, I think we're gonna get it better. Yeah.
It's not quite dialed in. I think the Kirkhorn one, that's a little bit more natural. I mean, I think more like Zach anyways. And I just think his voice is hilarious in general. I mean, and none of this, just to be clear, it's like making fun of them. Obviously, I love these guys.
No, of course not. It's flattery. It's flattery, really. It's saying, you're flattering them. Mimicking is flattering, right?
Yeah. The Zach one, I'm feeling a little bit better about at this point. But yeah, maybe next quarter, I can brush up on it a little bit more. I think I had the South African accent down a little bit more last time when we did this, so I'll let that go.
It's all right. We'll forgive you, Matt. We're 24 minutes away from the earnings call. Maybe we go around the horn and get folks' thoughts on what they expect. Oh, look at this. I sent him the link to see if he would actually join us, and guess what? James Stevenson has joined us today. Whoa.
How's it going?
How you doing, James?
Yeah, thank you, Farzad, for the link. I appreciate it.
Of course, man. Let's get your thoughts. Where's your head at? What are you thinking?
I think they're pretty good results, right? The stuff that missed was like regulatory credits and foreign currency exchange impact, and there was a flips. There was the one FX impact that was negative above the line, and then below the line there was a favorable impact. So I don't know what's going on there. But yeah, I mean, pretty good results. one of those funny two-step tangos on the stock market after the results came out. People were like, "Oh no, these are bad results." And smarter bots read the earnings release and said, "Oh no, these are pretty good results. Let's buy this." So I guess that happens sometimes.
Did it match your expectations? Did it meet your expectations? What you were looking for? Yeah.
It fell 17 cents short of my expectations. I had $1.08 non-GAAP, so 91 cents. 2 quarters in a row, I'm 16 or 17 cents high. Gary Black, he, you got to take your hat off to him. He's pretty good at dialing in these earnings estimates, but you got to get a little lucky to get real close. I've been fortunate to get real close before a couple of times, but this quarter was not one of those times. You got big wild cards out there with a foreign currency exchange impact and regulatory credits. There was no one-time tax favorability that I saw that came out this quarter, like there was the past 2 quarters. That would have helped because I was forecasting that. What's the other one? It's like 4 wild cards that come through every time. I'm forgetting one of them. But yeah, good results, right? Especially given the deep price cuts, right? You take big price reductions, you expect that the earnings are going to take a little nap for a while. But yeah, under the circumstances, really good results, I thought, from Tesla.
And then the people want to know, how's Loki doing?
He's great. Loki, come here. Come here, buddy. He is sleeping in bed. Let me turn this camera around because what people really want to see is Loki.
Oh my goodness. Oh, we definitely want to see this guy. Hang on a second. 1 second.
Yeah.
Let me fix this. Here we go.
There he is.
Let's see. Look at Loki.
What we really need is Loki in this stream. Yeah,
Nice.
He's hanging out in his bed, catching some Z's.
How old is
There's a little
Loki?
Alexandra in the background.
Yeah, there's Alexandra right there. Yeah. Normally I have Loki's
That's the
backdrop
red jacket,
up,
right?
but I was watching YouTube stream on my secondary monitor instead of using it for my. Let me turn this around so people can see who's talking.
Well, now our stream is complete because now we have Loki. And we also have you as well. But Loki definitely made the stream. So really appreciate you showing us.
Yeah,
Loki.
well, hey, it's a party. It's not a party until Loki's at the party, right?
Facts. All right, let's go around the horn and see. We're gonna share our thoughts on what we're gonna expect from the earnings call here. So maybe we'll have you start, James, and we'll go around. So we'll do James, Nico, Hans, Alexandra. I should do ladies first. You know what? We'll do ladies first and go the other way. So we'll do Alexandra, Emmett. I know. I just can't ignore how beautiful you look. I mean, my goodness, you're putting us all to shame.
This was the jacket with the button to sew. Did you see that on Sunday? The whole thing with oh yeah, you did because you jumped on that conversation when Stephen Mark Ryan put the famous
yeah,
quote
of
up.
course.
Was that cute?
Of course.
See, this is all due to that. There
So
you go.
cute.
So what do I expect? What do I really look forward to is the announcement of the Cybertruck delivery event. The announcement when we have those prices. I don't think they will give us the prices today, but they will tell us by when we should expect getting the specs and the prices. That's really for me the most important. I don't think they're going to give us much more information on AI. I think there will be a third AI day coming in the second half of this year. So maybe they will refer to that and make that illusion, but I don't think we'll have many more details on products. It's more a question on dates. I do pray to God. Sorry for those that are really religious and don't appreciate when I do these comments, but I do really pray to God that He's not giving us much more macroeconomics, because I really feel that Elon is too pessimist when it comes to that, and it's overhyped and whatever. I just think he should stay out of all that. These numbers actually show how good they are, no matter the economic environment. So I really hope that we're not getting into these Fed discussions and high interest rate, whatever. I really hope we're staying off those and moving on now. That's about it for me.
Let's go on.
Yeah. So I kind of am hoping. I think the big thing we all want to know is like Alexander saying, the Cybertruck delivery. I think we'll nail down like a month or 2 month range, and he might be like, "Oh, we'll probably do it in October, November, which probably means like November or something. I'm thinking it'll be the 4-year anniversary of the unveiling, but it'd be great to kind of nail down a tighter window of when they're going to actually have those deliveries that we can all get excited about, you know. But other than that, I think it feels a lot like Groundhog Day compared to the last couple earnings reports. Just like everyone asking the same questions: how's 4680s doing? What's FSD update? What's, you know, it would be cool if one of the analysts, you know, I don't see it in say.com, but if maybe one of the institutional analysts, when they take those questions, asks them if they anticipate further price cuts, and maybe throws in there like, or have you seen any measurable success with the experimental advertising? You know, I would love to hear feedback on that from them, because they should have some kind of results on whether it's just the Google ads or whatever they've done. They should see some kind of result from it already, and I'd love to just hear what that is, if there's any positive result. That'd be an interesting data point, so we can kind of anticipate if further price cuts are needed, or if they're going to try some other advertising perhaps.
Matt?
Yeah, I'd actually love to hear anything else that they can share on the AI strategy and breakthroughs that they've had. I mean, this is one of the main reasons that I went all in on Tesla, you know, 5 years ago, was like I saw the vision of like AI and how that could really change the company. And now all of a sudden that's like the topic du jour, where the market's going to finally give credit to companies that are good at real world AI. And I think, but even then, I feel like the advantage that the Tesla has, and what exactly they're doing that's so much more different, is hard for a lot of analysts to like plug into their models. So anything they can do to kind of share like why this is such a real opportunity, or what's different this time, I think would be helpful. But at the same time, if it doesn't happen, I don't mind that either, because as a long-term holder, it's mispricing that opportunity is good news for me too.
James?
Wow. The thing that I forgot to mention was from page 10 in the earnings release. In the profit section, what's the last 3 words? I've never seen them before in a Tesla earnings release. I'll read you the whole thing. While we continue to execute on innovations to reduce the cost of manufacturing and operations over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. You guys ever seen that before? Yeah.
First time.
Fleet-based profits. So that's outlook. The outlook is that there are going to be fleet-based profits. We've heard Elon say every year for a long, long time that FSD is going to be ready by the end of the year. I don't know. I think maybe they're finally onto an approach that's going to show rapid feature improvement, and we'll be testing out fleet-based profit opportunities soon.
I think that's a really great catch. And fleet-based profits, I also agree. I infer that to mean FSD, like fleets, but could it also mean something else potentially? Like, could it mean like selling fleets of vehicles to Hertz or something, do you think? Or is it pretty much, does everyone pretty much agree that it means, you know, it's like FSD related fleets?
I think there are a couple of options for that. One of them is fleet monitoring. And so if they are actually rolling out some software on the back end for someone like Hertz, or, you know, we also have the semi sales as well to Frito-Lay, that there could be other services that they're providing to fleet managers. And then there's also insurance. So if they're doing some sort of an insurance product for fleet owners, that's another option as well.
Yeah, great input, Hans. Anyone else have any thoughts? I mean,
Yeah,
there's lots of options with the fleet word, I feel like, you know.
Yeah, I was going to actually comment that, you know, fleet is actually a term used on the energy side of the business as well, to kind of refer to the like cumulative, like deployed base of assets. So like a generation fleet is all the power plants that a company owns. But you could easily think of like what Tesla has with selling, you know, not only megapacks, but power walls and all these other things that can be stitched together into a VPP. And you can get some services based revenue on that and kind of get fleet based profits by stitching together all these assets that you got out in the real world. And I think you could also think of the automotive side in a very similar vein, where yeah, like you can obviously sell FSD and get like robotaxi revenues, but you're also starting to get more services revenue in a pretty meaningful way, just like with more charging and that kind of thing. So I would think of it more as like the cumulative deployed fleet of hardware that you've got out there on both energy and auto. You can start monetizing those in new ways as well.
All right, so we have a tremendous need for clarity on this ambiguity. There's a lot of different things fleet can mean, so let's hope we get some further detail and color on that during the.
It would be great if some of the institutional analysts are smart enough to follow I'm sure some of them are smart enough to follow retail analysts, but are plugged into this live stream and got this incredible clue from you, James, and can now insert
ask
that
the question.
question into their Q&A.
True. And if it's not Farzad, how about you do a tweet afterwards, as we know he's reading yours.
Done.
There you
I already
go.
wrote it. I'm just waiting to hit send.
You'll have your views. You'll have your
Yeah.
income. You'll have your everything.
That's funny. James, was there something specific you're looking for on the call, or was that kind of what you're looking?
That was my thing. Yeah, I wanted to hear him talk about the fleet-based profits. I mean, outlook is the important stuff, right? The frustrating thing is to hear people ask the same questions we've heard answered every quarter, and then we get the same answer we got last quarter. We're like, well, that was a waste of a minute. we could have had some new question get asked and heard some new answer we've never heard before. That would have been better.
From my end, and I'll throw it to you, Nico, as we're going around the horn here. So, Cybertruck, I think if there's any additional color on Cybertruck, will be something that I'm looking for sure. After looking at those pictures and some of the conversations we've had on this call, maybe I need to temper my expectations on that a little bit. Perhaps we won't get much, but I do think there's still something to be said about all the ramp up of excitement and sort of all the things we're seeing with that car. I think there's something there. After James spotted that verbiage, that's something that's super, super interesting to me now. And the fact that they have pencil to paper now on fleet-based profits, then there has to be something there. So those are my things. And yeah, we'll see how it goes. I do have a concern, like some of you have shared, that it will be sort of a repetitive call, but I'm hoping that Elon, will just take it off the cuff and just start doing Elon things, and then we'll start going down rabbit holes we didn't even know existed, like he likes to do. So, Nico, and then
I'm just going to fart on Zuck, and that's how I'm going to win the battle.
Okay, perfect.
We need some new mannerisms from Elon that Matt can chime in on next time. Yeah.
I love it. Nico, go for it.
Yeah, so I guess I would love to hear everything you guys have said so far, so I won't repeat those. I guess 3 things for me. One, it'll be just interesting to hear how many times they talk about AI. I think we'll hear that a lot. I feel like that's a trend on every earnings call these days. I would also like to get, we talked about time window for Cybertruck deliveries. I would like to see a time window for the next AI day. I think that's more important for me. That's what I want to see. And then I hope one of the institutional investors picks up on the various part with the next generation vehicle, and they ask, does that mean that you're starting that in Giga Austin now, or what does that mean with the various? Does that mean future plans, or are you already working on that now in Austin? Because I think that has huge implications. That if they're working on that line now, if they're working on ironing out the kinks now in Austin on the unboxing method, then come the build of Giga Mexico, they could potentially get to, to actually just work on production a lot faster. So I think that various really leads to a whole bunch of different potential questions.
Yeah, I would echo, a lot of them, especially the AI, anything related to the dojo actually running production workloads. That was one of the ones that I mentioned earlier that I still want to hear more about that. I did notice that in the deck that they they put a chart up there for cumulative FSD miles, and it was over 300 million. So I'd love to hear any color on that, if that's continuing to accelerate. And yeah, I would love to hear if we get AI, I think AI Day 3 is something that we pretty much all of the things that they've kind of been hinting at us recently lead us to believe that there has to be a major AI Day 3 presentation here in the near term future, and it deserves a lot of attention. There's a lot of stuff going on there. I think that we'll get a little teaser on Optimus again, hopefully a little short video, and I think those are the main things.
Awesome. Well, thank you all so much for joining us thus far. Between all the streams, we're over 5,000 people watching.
This is
It's
great.
crazy.
I just want to add one thing, make everybody happy. Kristen is back on Twitter. This worked.
Awesome.
And the other thing is, because I saw a comment, somebody telling me I touched too much my hair. That's because James is here. Because when James, I mean, all the other guys, I have no problem because I'm winning the game. But there comes James, and then I have to make sure. You see, there he does it again. Oh,
He's a
Gotta
spokesperson
prune
for
it.
L'Oreal.
I
Didn't you
know.
know?
Love you, James. Stop putting shade on me. I love you.
I had to tie it back today. It is hot
Oh,
and
there he
humid in
goes. Oh my
Florida.
gosh.
So.
Okay, you can take me off now.
That's
Yeah,
awesome.
something
go
else,
ahead.
just real
Yeah.
quick, just to ramble off what Hans was saying. It would be awesome to see them give us color on why they're actually going to production now with Dojo, because in the past, Elon has been very clear that when the team says they want to use Dojo, or when Dojo outstrips the NVIDIA clusters, that's when they'll make the cutover. So I'd be curious to know if they're doing the cutover now because there's just not enough capacity and compute, or if it's because Dojo is outstripping. If they are outstripping, is it on a per compute operation? Is it on a pricing perspective, or what that looks like? Because again, just thinking longer term, that has big implications for a as a service offering. So that would be really interesting. I don't think anyone's really, or they haven't really divulged that much about why now is the time to incorporate Dojo.
Yeah, they haven't really given us that information yet. I know that I actually was able to interact with Naveen Rao of Mosaic ML recently, and he had a great stream with Gally from Hyperchange about a year and some change ago, where he was saying that, one of the real challenges for Dojo is getting their internal software to divide up a massive training job across all of the separate Dojo chips evenly. So it's essentially their internal equivalent to CUDA. That getting that built and operational is going to be one of the real challenges that goes above and beyond what they've done with the hardware of the chip. And they so far have given us also zero information on that. And so it could be that when Elon is saying, hey, we've got this up and running on a production workload, that could literally just be saying, hey, we finally have been able to complete our first test run of that in-house equivalent of CUDA that actually, is kind of the operating system of Dojo. So I doubt that the team is using Dojo in a huge way right now, and that it's really outperforming NVIDIA chips. I know that there will probably be a lot of people who disagree with me on that, but I think based on how long this development has taken, that they're probably being a little bit on the optimistic side. You're trying to give us some good news, and it's still probably not quite there yet.
Okay, we are about 4 minutes away from the call going live. We will be sharing the call on the stream as well, so do stick with us if you'd like. You can also go to Tesla's channel to listen to it. You can go to Twitter to listen to it. You can go to other people's streams to listen to it. But it is about to go live. I want to make sure I have it shared properly. I'd like to do a quick test. Let me know if you guys can hear the audio from the thing. Can you guys hear it? Yeah, I can hear it. You guys can hear it as well, right? Okay, perfect.
It works.
So we're nice and staged. So I'm gonna put this a little bit louder. Maybe right here. Put it right there. Okay. And then that way, once they go live, we can hear it. So cool. 4 minutes away. Let me get to some of these super chats here. Thank you all so much for your generous super chats. I already showed this one. $10 for Matt's use of profound during his incredible impersonations. Well done, Matt. You were a beast. Short Tesla. Elon fired my wife from Twitter. Well, sorry that happened. Hopefully, maybe you shouldn't be. Yeah. Anyway, I won't make a joke. Sorry that happened. Reginald Bailey, $10. Please send James half of this and let him know his charts are otherworldly. Appreciate all you do. I can just send them. I can send them the whole thing. Thank you, James. Your charts are otherworldly. They're
You're very, very kind, Reginald Bailey.
Yeah. Fantastic. Cool. Any last thoughts before we share the call? Anything?
Do you have to drink every time you hear AI?
Oh God. Oh boy. Maybe I should go get
Every time Elon says order of magnitude, you have to take another sip of your Elon Musk drink.
Anybody prepare a bingo card?
I was just thinking that, Alexandra. So what goes on there? Like profound order of magnitude.
Crazy? Isn't it crazy? You always think what I think. I think we're connected, right? All our kids, all our life.
I know. We got the accounting interest. I know. I just don't have the hair.
The free space on the bingo cards is just
Oh, the pose.
Real quick, I do want to let you guys know. Yeah, James is totally the go-to guy for charts. Herbert, unfortunately, wasn't feeling well, and he wasn't able to make the stream. You should still be able to view this on his stream. He was supposed to be on, but unfortunately, he's dealing with a little bit of illness, but he seems to be doing okay. If he's able to come on, he'll come on. If not, send him your thoughts, and hopefully he'll be well very soon. I don't think it's anything too serious, but yeah, he just needs to rest up a little bit. So, Herbert, if you're watching this, rest up, drink your water, and
exactly.
We got you covered.
Lemon juice, I told him just now. So let's see what happens. I'm gonna jump off. I'll be back later if I have the time. Okay.
Sounds good. Thank you, Alexandra.
You're good. Love it. Bye bye. Take
Thank
care.
you so much. Bye bye. All right. 1 minute away from the call. Thank you all so much again for joining us. A little bit over 5,000 viewers across all platforms. We have James Stevenson at @I_cannot_enough, which is one of the greatest Twitter handles of all time. We have Nico from Investing Against the Grain. We got Matt Smith from rebellionaire.com, his new venture after he backstabbed Emmett in the back. We have Emmett Peppers from Good Soil, and we have Hans at Hans C. Nelson. Great panel, y'all. Thank you so much for joining me today. There's other awesome creators as well on YouTube making a bunch of content, so I highly encourage you to go check out their content as well. We've got Rob, we got Dave, we've got My Tesla Weekend. We have a bunch of different people creating awesome content. James, everybody out there. So make sure you go support every single one of them. Matt, I see you're off mute. Go for it.
I just want to give a shout out to Hans for the full flow stage combustion cycle. I think is that an Everyday Astronaut t-shirt. That is one of the best videos I've ever seen on YouTube. It's so good. It just like really gives an idea of how hard building that engine was and why, the SpaceX culture is just so impressive.
He's got some of the best merch out there. What's his name?
Everyday Astronaut, Tim Dodd.
Yeah. Some of the best merch. Okay, I think we're live.
Yeah.
Oh, maybe not. I thought we were.
Since you mentioned my handle, I'll just say very quickly, Holtmar's blog and I both were a little bit too clever in our choice of Twitter handle. So everybody who went straight forward, that was the right move. Most people will not get your clever pun.
Yeah, who knew that it would stick with you for life, right?
Yeah.
I think I was like responding to you for like 2 years before I finally realized what it was.
What can you not enough, James?
I pictured it as I just cannot enough, just like an exasperated. That's what I thought it was.
Yeah.
And I thought that was pretty good. And then when it clicked.
Yeah, I would say most people don't know what underscore means. Yeah. Or that little line at the bottom is called an underscore.
Good afternoon, everyone, and welcome to Tesla's second quarter 2023 Q&A webcast. My name is Martin Vieca, VP of Investor Relations, and I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q2 results were announced at about 3 p.m. Central Time in the update deck we publish at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into the Q&A, Elon has some opening remarks. Elon?
Thank you, Martin. So just a Q2 recap. In Q2, we achieved record vehicle production and deliveries and record revenue of about $25 billion in a single quarter. And Model Y became the best-selling vehicle of any kind globally in Q1, surpassing the likes of Corolla and Golf. So it was the number one vehicle of any kind, including vehicles that are sell at a far lower price. This is, I think, an incredible achievement by the Tesla team, and just a huge thank you to our customers for their support. This came in spite of high interest rates and a lot of macro uncertainty, and nonetheless, we managed to achieve operating margin of about 10%. We continue to target 1.8 million vehicle deliveries this year, although we expect that Q3 production will be a little bit down because we've got summer shutdowns for a lot of factory upgrades. Just probably a slight decrease in production in Q3 for sort of global factory upgrades. In the long term, autonomy, we think, is going to just drive volume through the ceiling next level. And our sort of future robotaxi products, dedicated robotaxi products, we think have like quasi-infinite demand. The way we're going to manufacture the robotaxi is also itself a revolution. And so it's revolutionary design made in a revolutionary way. It'll be by far the highest units per hour of any vehicle production ever. So we're very excited about that. With respect to Autopilot and Dojo, in order to build autonomy, we also need to train our neural net with data from millions of vehicles. The more, this has been proven over and over again, the more training data you have, the better the results. There are times where we see basically in a neural net, basically it's sort of at 1 million training examples, it barely works. At 2 million, it slightly works. At 3 million, it's like, wow, okay, we're seeing something. But then you get like 10 million training examples. It's like, it becomes incredible. There's just no substitute for a massive amount of data. And obviously Tesla has more vehicles on the road that are collecting this data than all other companies combined by, I think, maybe even an order of magnitude. So I think we might have 90% of all, or a very big number. The success in AI endeavors is a function of talent, sort of unique data, and computing resources. And we have outstanding capabilities in all three arenas. And I really just don't know how anyone could do what we're doing, even if they had our software and had our computer, if they did not have the training data. So speaking of which, our Dojo training computer is designed to significantly reduce the cost of neural net training. It is designed to, it's somewhat optimized for the kind of training that we need, which is video training. We just see that the need for neural net training, again, talking about quasi-infinite things, is just enormous. I think we expect to use both NVIDIA and Dojo, to be clear. But we just see a demand for really vast training resources. We think we may reach in-house neural net training capability of 100 exaflops by the end of next year. So to date, over 300 million miles have been driven using FSD beta. That 300 million mile number is going to seem very small very quickly. It'll soon be billions of miles, then tens of billions of miles. FSD will go from being as good as a human to then being vastly better than a human. We see a clear path to full self-driving being 10 times safer than the average human driver. So, and between Autopilot, Dojo Computer, our inference hardware in the car, which we call sort of hardware 3, 4, but it's really dedicated. It's a high efficiency inference computer that's in the car, and our Optimus robot. Tesla is clearly at the cutting edge of AI development. With regard to our Cybertruck, we continue to build release candidates of the Cybertruck on our final production line in Austin. I'm actually here in Austin at the Gigafactory. This is the first truck that we're aware of that will have 4 doors over a 6-foot bed and will fit into a 20-foot garage. So it's sort of biggish on the outside, but it's even bigger on the inside. So I think that's one of the elements of good design is it should feel bigger on the inside than it looks on the outside. And this is no small car, but we really cared about the exterior dimensions of the Cybertruck down to the last millimeter. So it's just we're trying to get right in the middle of the Goldilocks zone, not too big, not too small, and then really maximize the utility of the volume. And we can't wait to start delivering it later this year. Some other highlights: our global supercharging network now stands at over 50,000, or roughly 50,000 connectors and over 5,000 locations. As I think a lot of people are aware, the Tesla Tesla charging standard, which we made open source, and is now called the North American Charging Standard. We're deeply honored that Ford, GM, Mercedes, and many other OEMs have signed up to use our connector and gain access to our charging network. We strongly believe in helping other car companies to accelerate the EV revolution and just trying to do the right thing in general. So that's our goal there. Then something I think I want to emphasize very, very strongly, this is a very important point, is that Tesla, just as with the North American Charging Standard, although we're not licensing, in that case, we're not licensing, we're just making it available. but we are very open to licensing our full self-driving software and hardware to other car companies. And we are already in discussions with early discussions with a major OEM about using the Tesla FSD. So we're not trying to keep this to ourselves. We're more than happy to license it to others. And lastly, our new lithium refinery and cathode facility are progressing well. Then in conclusion, we continue to focus on making as many cars as we can while maintaining healthy financials. Our artificial intelligence development is obviously entering a new era, and we're incredibly excited about what's to come. Our other businesses, such as Megapack, supercharging, service, and whatnot, all started to become a meaningful contributor to overall profitability this quarter. And then lastly, I'd just like to profusely thank all of our employees who are making a lot of extra effort during uncertain times. Thank you very much for your hard work and the impact you're making.
Thank you very much, Elon. And I think Zach has some opening remarks as well.
Yeah, thanks, Martin. As Elon mentioned, Q2 was another record quarter of production and deliveries, as well as records in profit for our energy and services and other businesses. Congratulations again to the Tesla team on the continued progress. As we navigate through a period of economic uncertainty, rising interest rates, volatility in consumer confidence, and regulatory change, I want to comment on our financial approach. First, the single most important priority is to ensure we are continuing to invest heavily in the core technologies that will drive the long-term value of the business. This includes increasing spending on AI-related technologies such as full self-driving, Optimus, and Dojo, as well as new products such as Cybertruck, our next-generation platform, and the Semi, as evidenced by the continued growth in our R&D spend. This also includes continuing our investments in capacity expansion, not only in our vehicle factories, but also our supercharging network, service, internal applications, and battery processes, as we continue with meaningful capital expenditures to lay this foundation for the future. Second, we continue to work towards our goals of maximizing volumes on both our vehicle and energy business, but most importantly, doing so in a way that generates the capital to continue our pace of R&D and capital investments. This requires a strong focus on per unit COGS reductions in each of our key businesses, as well as working capital improvements on raw materials, work in process inventory, and customer AR, all of which progressed appropriately in Q2. If we look specifically at our automotive business, our gross margin showed a modest reduction and remained healthy, despite action taken to further improve vehicle affordability early in the quarter. We realized per unit cost improvements in nearly every category, including material cost and commodities, manufacturing costs, and logistics, while also continuing to rapidly increase the build rate in our Austin and Berlin factories. For our energy business, we improved margins and gross profit driven by cost reductions and deal economics, particularly with Megapack. As a reminder, storage volumes are typically volatile sequentially based on the types of projects and their specific revenue recognition milestones. As we look forward to the rest of the year, I want to reiterate Elon's comments on Q3 volumes driven by planned downtimes for factory upgrades. These upgrades will also carry some amount of factory idle cost. However, we are working to minimize as much as possible. It's also important to keep in mind the uncertainty in the macro environment, which can impact our execution positively or negatively in the near term. Regardless, we continue to remain dynamic with a focus on fundamental efficiency and a long-term outlook. Congratulations again to everybody on a great quarter.
Thank you very much, Zach. And let's go to investor questions. The first question on licensing FSD we've already answered, so let's go to the second one. The second question is, what is the status of 4680 cells? How far are you from the specs you laid out on Battery Day? When do you expect to achieve what you laid out on Battery Day?
Yeah, first I'll just start with a little bit of a production update. So in Texas, 4680 cell production increased 80% Q2 over Q1, and the team surpassed 10 million production cells produced here in Texas. So congrats to the team for that. Their focus on yield reduced our scrap bill by 40% quarter over quarter, and that resulted in a 25% reduction in cell COGS. Here in Texas, we're preparing to launch our Cybertruck cell, which is 10% higher energy density than current production. That was accomplished through process and mechanical design optimization. As we scale Cyber cell production through the end of the year and early next, we should be in a comfortable place on cost per cell. Against our battery energy density targets, the Cyber cell is at our expectations on a like-for-like electrochemistry basis. We're yet to integrate silicon or in-house cathode production, both reviewed on Battery Day, which do bring significant further energy density and cost improvements, but that is a topic for another day. Lastly, it is important to remember that most of what we focused on at Battery Day was the Tesla-engineered 4680 production system and the improvements we strove to achieve on equipment, factory density, capital cost, and utility cost reduction, all of which we are realizing in our Texas scale-up to date.
Thank you very much. The next question is, can you talk more to the upcoming Tesla energy products and how your thinking has evolved on the revenue model? Given Tesla's AI capabilities, how do you see the long-term mix between hardware margin and recurring software margin from AutoBidder as this segment accelerates?
We can't comment on future product roadmap, but I can provide a quick energy Q2 update. Megapack continues to show strong demand globally, with Lathrop ramping successfully to meet our contracted projects in 2023. As stated last quarter, Megapack margins are in a reasonable place in line with our target market, vehicle target margins. The second final assembly line at Lathrop is progressing on schedule, eventually doubling Lathrop capacity ahead of our full factory ramp in 2024. We have several exciting large projects in construction or nearing completion, including the KES project in Hawaii, the Riverina project in Australia, several projects in California, and one here at Gigafactory Texas that I toured today, actually. We want to thank our customers, utilities, and grid operators for trusting us with these projects. On the autobidder question, we continue to grow autobidder contracts in wholesale markets like Australia, Texas, UK, and California with over 6 gigawatt hours under Tesla's dispatch next year. In the UK, our project performed best in the industry in Q2. Autobidder does have software margins and is an enabler for hardware sales, but it's a relatively small contributor to revenues given how much deployment growth on the Megapack hardware side is occurring. It's important to remember that these large capital projects have lifetimes of 20 years, so recurring revenues on an annualized basis relative to upfront CapEx are small. On the residential side, we have some fun things happening. We recently surpassed 500,000 Powerwalls installed. Just this week, we were launching Charge on Solar, which allows Tesla Powerwall and vehicle customers to charge their vehicles using their excess solar and drive only on the sunshine that hits their roof. Yesterday, we began paying customers in Texas for participating in our virtual power plant to provide grid support to ERCOT. We expect these credits to lower our median customer's annual bill by a third and to increase these credits over time as ERCOT expands market access. And today, we are expanding Tesla Electric enrollment to new Model 3 owners in Texas, followed by all Texas vehicle customers over the rest of the quarter. Unfortunately, and somewhat similar to Tesla Insurance, bringing Tesla Electric and VPP capabilities to our customers requires working through a fractured regulatory environment on a jurisdiction-by-jurisdiction basis. In the long run, the value of residential energy, software, and hardware will be driven by the level of market access that utilities, market operators, and regulators permit. Where Powerwall is eligible to provide the full stack of energy services, like peaker capacity and system buffering, such as in Australia, we can more than double the value of ownership relative to a typical system today.
Thank you very much. The next question is, could you quantify the benefits to COGS per unit from the IRA battery manufacturing incentives? And secondly, battery raw material declines year to date.
All right, I can take that. On the first part of the question for IRA manufacturing incentives, we provided previous guidance that we expect these to be for the course of this year in the range of 150 million to 250 million per quarter. We are staying within that boundary as we guided previously, so that was the case in Q2 as well. I will note, and I think we've mentioned this before, that this includes a 50-50 sharing of credits for qualified cells from our long-term battery partner, Panasonic. On the commodity side, we are continuing to see improvements there as we've discussed previously. Lithium is the most notable improvement so far. I think I commented on this on the last call, because typically we see this coming about a quarter before it actually is realized in our financials. And also, just as a reminder, we're not fully exposed to the price of lithium. Our supply chain team has done a terrific job in partnership with a bunch of other companies to put in place some long-term agreements here, but we do have some exposure that moves up and down. We're also seeing benefits in aluminum and steel, which I think is great. Not as large as the lithium impacts, but they contribute nonetheless. So if we add up the total impact of this in Q2 relative to prior quarter, it's about the same size and magnitude as the IRA benefits that we also received. Just to put this in context, as you look at COGS per unit sequentially from Q1 to Q2, I think there's two things to keep in mind there. The first is that our SX mix for deliveries increased quite a bit from Q1 to Q2. So as you think about fundamental cost reductions, it's important to adjust for that. And then secondly, as we continue to work on reducing our Austin and Berlin costs, which we did quite a bit of that from Q1 to Q2, these factories are still slightly above Model Y production costs elsewhere. And in the quarter, our mix of Austin and Berlin related builds increased. And so that's something to consider as you model out the impact from Q1 to Q2 in terms of COGS per unit. I do want to ask Karin if there's anything else on the commodity side or just more generally you want to add here.
Yeah, as you mentioned, Zach, we've naturally been a little bit hedged from the lithium position because of the long-term contracts we have in place. But we have seen reduction in pricing across the board for all commodities that specifically go into batteries, such as nickel, cobalt, and graphite. And the reductions in pricing translate into thousands of dollars when you look at it from a per vehicle impact. We're taking advantage to extend some of those fixed price contracts through the end of the decade. So it's a playbook that we'll continue to kind of go back to as we look to the future.
Thank you. The next question on FSD. Have you considered allowing FSD transferability as a lever to allow existing customers to upgrade to a new Tesla instead of being locked into an existing car due to the price of FSD?
Yeah, this is a question we get asked a lot. So we're excited to announce that for Q3, we will be allowing transfer of FSD. This is a one-time amnesty. So it needs to be you need to take advantage of it in Q3, but or at least place the order in Q3 within reasonable delivery timeframes. Yeah, I hope this makes people happy. But we're not going to do it. This is a one-time thing. We're doing okay.
Right. The next question: When will you give more information about the Cybertruck orders, estimated delivery schedules, pricing, and specifications?
The demand is so far off the hook you can't even see the hook. So that's really not an issue. I do want to emphasize that the Cybertruck has a lot of new technology in it, like a lot. It doesn't look like any other vehicle because it is not like any other vehicle. And the production ramp will move as fast as the slowest and least lucky element of the entire supply chain and internal production. So I wouldn't expect I hope it's smooth. We're certainly better at production ramps than we've got a lot of experience with production ramps, but first order approximation is there's like 10,000 unique parts and processes in the Cybertruck, and if any one of it'll go as fast as the least lucky, least well executed element of the 10,000. So always very difficult to predict the ramp initially, but I think we'll be making them in high volume next year, and we will be delivering the car this year.
Thank you. The next question is: critics of gigacasting contended that process makes vehicles harder and more costly to repair, essentially pushing costs onto the customer. Can you share some details about the initial repair experience with gigacast vehicles?
That must be why everyone's copying us.
Yeah. Thanks, Elon. This is Lars. And Martin, that's like simply not true. There's a misconception that traditional bodies are easy to repair, but they're made of multiple materials and multiple joining methods. Spot welds and rivets have to be drilled out. Panels and structural adhesive have to be chiseled out. Dried adhesive has to be removed. Stampings cut. Blah blah blah.
It's a crazy patchwork quilt.
Yeah, and so putting that back together means time and money. Using an example of replacing a rear cast rail on a Model Y, to do that versus like what we replaced it with from the Model 3, it's 10 times cheaper and 3 times faster to do it with the cast rail. My design team works with our collision repair team since we're closed loop on this with insurance, and we design specific parts that make it easier and faster to repair. And we have an incentive to do that because we have our own insurance and our own body shops. We expect that we'll continue to do this, and collision repair will continue to become cheaper and faster over time. And we already make this available to all body shops through our Tesla-approved body shop training.
Yeah, closing the loop on collision repair and factoring that into design is a big deal.
It's crucial. I don't think anyone else can do it with the ecosystem that we have. So
yeah, and we are actually able to change the details of the casting with inserts, and we actually do that all the time. So because the inserts actually wear out and need to be replaced anyway, so we can actually make design changes to the inserts and tweak the castings to. But the cast, basically, cast rear body or front body is lighter, cheaper, better for noise, vibration, harshness, much easier to manufacture, and it's better in every way. And that's why so many other car companies are copying us. Because
probably
they don't know they certainly put out a lot of press releases about it. I think it's basically going to be how all cars are made in the future.
Thank you. Next question. How many Optimus bots have been made, and when will they be able to start performing useful tasks?
10 million. Yeah, I think we're around 5 or 6 bots. Like, you know, we're like 10, I guess. Yeah. Which depends on how many are working in what phase. But it's sort of, you know, yeah. Like there's more every month. There's a lot of interesting things. A lot of interesting things about the Optimus bot. We found that there are actually no suppliers that can produce the actuators. There are no off-the-shelf actuators that work well for a humanoid robot at any price.
Certainly not compelling humanoid robot.
Yes, not a humanoid robot that can do stuff that, you know, the things that a human could do. So we've actually had to design our own actuators that integrate the motor, the power electronics, the controller, the sensors, and really every one of them is a custom design. And then of course we'll be using the same inference hardware as the car. You know, but we are in designing these actuators, designing them for volume production, so that they're not just lighter, tighter, more capable than any other actuators that we're aware of that exist in the world. There's also actually manufacturable, so we should be able to make them in volume. The first Optimus that will have all of the Tesla designed actuators, sort of production candidate actuators, integrated and working, should be around November-ish. And then we'll start ramping up after that. You know, in terms of when we'll be able to do some useful things, we'll first be trying this out in our own factories and just proving out its utility. But I think we'll be able to have it do something useful in our factories sometime next year. I would be, yeah, I'm pretty confident of that. So yeah, and it's going well. I should say another cool thing about Optimus is that, you know, there's just in the US alone, there are 2 million amputees. And I was just talking to the Neuralink team, and by combining a Neuralink implant and a robotic arm or leg for someone that has had their arm or leg, or all arms and legs amputated, we believe we can give you basically a cyborg body that is incredibly capable. $6 million man in real life. But don't want to cost $6 million. $60,000 man. It sounds impressive, but it'll actually, you know, so that actually could be a really, I think would be incredible to, you know, potentially help millions of people around the world, and give them, you know, a robot arm or leg that is as good, maybe long term better than a biological one.
Thank you. The next question is, how has the order intake trended relatively to production levels during Q2, and how is it trended in the quarter-to-date period? Conceptually, how does Tesla decide when is it appropriate to reduce prices or add other sales incentives to increase demand?
Yeah, I guess demand is roughly tracked production, which is what we aim for. We look at, you know, something that we have that really, I think no other car maker has, is that we have real-time demand and real-time production. Like, so 7 days a week, you know, I get an email, auto-generated email. It shows output from all factories and orders globally. So it's like a real-time finger on the pulse of Earth, basically. we adjust course according to what the mood of the public is. But buying a new car is a big decision for the vast majority of people. So, anytime there's economic uncertainty, people generally pause on new car buying, at least to see what happens. And then obviously another challenge is the interest rate environment. As interest rates rise, the affordability of anything bought with debt decreases. So effectively increasing the price of the car. So when interest rates rise dramatically, we actually have to reduce the price of the car because the interest payments increase the price of the car. And this is at least up until recently, it was I believe the sharpest interest rate rise in history. So we had to do something about that. And if somebody's got a crystal ball for the global economy, I really appreciate it if I could borrow that crystal ball.
DM us.
Yeah, exactly. DM me on Twitter. It should be a note on Twitter. One day it seems like the world economy is falling apart, and the next day everything's fine. I don't know what the hell's going on. To be totally frank, I wish I did. That's why I say, like, I always on Twitter I posted, like, just really advising, because I care a lot about the sort of the small shareholders, especially ones that have stuck with us through thick and thin. I love you guys, and we can't control these macro shocks, or the manic depressive nature of the stock market. So that's why I recommend against margin loans in times that are turbulent. If times are not, I have very high confidence in the long-term value of Tesla. I see it really, see a path to a 10x. Well, maybe not these days, but they'll call it a 5x increase in the value of the company, maybe a 10x. But where things go along the way, the trials and tribulations and the mood of the markets, one cannot predict. And so, I have very high confidence in the long-term value of Tesla. I see it really, see a path to a 10x. Well, maybe not these days, but they'll call it a 5x increase, and hold it. That's it. You will win. The reason companies exist is to make goods and services, ideally great goods and services. They don't exist for any other reason. They shouldn't. So that's why you should buy a stock of a company that makes great products and has a great future pipeline. It's common sense, actually. And then generally, if you provided you're confident about what that company's products or services are, when the market panics, buy, and when the market is, overly exuberant, you can sell. I'm not recommending you sell Tesla, but buy low, sell high. Warren Buffett actually, I think, has a saying. I'm paraphrasing him, but a publicly traded company is like, it's like imagine you're living in your house and some crazy manic depressive guy comes and stands at outside your house and yells property prices at you. So it's a different price every day, but the house is still the same house. So this is a stock market. Really credit that to Warren Buffett.
Thank you. Let's go to the next question. With the emphasis of price cuts to drive volume growth eating into automotive gross margin, can investors expect to see automotive gross margin stabilize or even rise due to efficiencies outpacing the cuts? And if so, when?
Oh, man. Where's that crystal ball again? If I may, it's like, look, the short-term variances in gross margin and profitability really are minor relative to the long-term picture. Autonomy will make all of these numbers look silly. I'd recommend looking at ARK Invest. I think their analysis is very good. The best, I mean, and generally, FinTwit or like if the finance, the smart finance people on Twitter follow their accounts. They're great. That's that's in my opinion where you'll get the best info. So I strongly believe Tesla is an epic long-term investment, and don't sweat it when things go up and down. In fact, if the market panics, buy. If the market's a little too exuberant, sell at the time. But just generally, like I feel confident. We'll deliver over the long term, but can't control short term. So, and the autonomy is really where it's at. I mean, Zach, what do you?
Oh, I fully agree with you. I mean, I think the only thing in the short term that matters is what I said in my opening remarks, which is, are we generating enough money to continue to invest? And, the portfolio of products and technologies that the technical teams are investing in right now, this is intense. It's intense in terms of investment. It's intense in terms of potential.
Frankly, I think it's ridiculous that we have positive free cash flow in a capital-intensive business while investing massive amounts of money in new technology. That is super hard.
And vertical integration. It's not even just like new products, but also.
Yeah, we actually make our shit.
Yeah.
We don't. Yeah.
And so
others, but. Sorry, Kristen, boarding school.
And so, at least from my perspective, what matters is continuing to generate the cash to invest. That means continuing to be hyper-focused on near-term cost reduction, because everything we do in near-term cost reduction provides capital to reinvest. Hyper-focused on working capital management, of which we've made quite a bit of progress there on the raw materials and WIP side of that. We've been very focused on accounts receivables as well to ensure that we can continue to reinvest the cash. That this is what we're focused on.
Yeah.
And, so there's, a set of this that we control. We have a pipeline of cost reductions. We are getting tailwinds in the commodity space right now, as Karn mentioned. That's helpful. Variability around average selling prices, goes back to Elon's point. We don't control interest rates. We don't control macro consumer sentiment. But we have an obligation to be responsive to that, to ensure that we're matching supply and demand and keeping things balanced. And so this is how we're managing the next handful of quarters. Soon enough, these quarters will be behind us. They won't be part of the present value of future cash flows of the business. And so we want to make sure we keep that view and make sure that the long term of the business is exactly the way that we want it to be.
Well said. Yeah.
All right, thank you very much. And now let's go to analyst questions. The first question comes from Dan Levi from Barclays. Dan, feel free to unmute yourself.
Great. Good evening. Thank you. Wanted to start first with a question about your efforts in AI and Dojo. It's pretty clear. It sounds like you're accelerating your focus. Can you maybe provide us with a sense of what the process is of refining a product? Is it more machines? And maybe you could give us a sense of, when the payout when you start to see the payout and what the resource outlay is. What should we expect on the OpEx front as a result of this?
Sorry, are you saying how much are we going to spend on Dojo, or?
Yeah,
R&D of Dojo.
Yes.
Well, we're not going to be open loop on our Dojo expenditures. So, but I mean, I think we will be spending you know, certainly north of $1 billion over the next year on you know, through the end of next year, it's well over $1 billion in Dojo. Yeah, so I mean, we've got a truly staggering amount of video data to do training on. And this is another thing. I don't like in order to copy us, you'd also need to spend billions of dollars on training compute. I mean, it's like, and it's also hard to, you know, you need the data and you need the training compute. It's like think of all the things needed to actually achieve this at scale for a generalized solution for autonomy. This is one of the hardest problems ever. You know, you see a lot of AI companies doing, you know, LLMs and whatnot. And I'm saying, if they're so great, why can't they make a software driving car? Because it's harder. That's why. So, but I do think I think there's some, you know, great AI companies out there. But just fundamentally, the staggering amount of data we've got to process has got to be processed somehow. And custom silicon is the best way to do that. So that's what Dojo is designed to do is you know, optimized for video training. It's not optimized for LLMs. It's optimized for video training. With video training, you have a much higher ratio of compute to memory bandwidth. So this, you know, whereas LLMs tend to be memory bandwidth choked. So that's it. I mean, but like I said, we're using a lot of NVIDIA hardware, and we continue to we'll actually take the NVIDIA hardware as fast as NVIDIA will deliver it to us. Tremendous respect for Jensen and NVIDIA. They've done an incredible job. And frankly, I don't know if they could deliver us enough GPUs, we might not need Dojo, but they can't. So they got so many customers. They've been kind enough to, you know, nonetheless prioritize some of our GPU orders. Yeah, the sheer magnitude of video training, because like I said, we're not trying to just get as good as human. We want to get to, you know, 10 times better than human, maybe 100 times better than human. Right now, I believe there's something on the order of 1 million automotive deaths per year. And then if you say permanent serious injuries, I think it's probably closer to 10 million per year. You know, so it matters if you're, you know, twice as good as human, 10 times, you know, like 10 times better than human would still mean 100,000 deaths and 1 million severe permanent injuries. So it's like, okay, well, we'd rather be 100 times better. So there's really, you know, it's a march of nines, and we want to achieve as perfect safety as possible. It's vast, truly mind-boggling amounts of video and computer needed for that. So, and then I do think there's other applications for Dojo, but we just desperately need it for video training.
Great. Just to add to what Elon mentioned, so you know the numbers that he mentioned are, you know, between R&D spend and capital spend, yeah. And you know this is moving quickly, you know, and so when we provide a 3-year outlook on our capital expense, we are considering these expenses in that outlook, and as that moves up and down, we'll continue to update our guidance in the queue.
Yeah. I want to say the fundamental rate limiter on the progress of full self-driving is training. That's if we had more training compute, we would get it done faster. So that's it.
And it's just difficult to predict how quickly we can execute on it.
Great, thank you. Just as a follow-up, I recognize, you know, there's some incredible macro uncertainty right now, but you're sticking with your near-term, your volume target of 50% CAGR. As we just think about sort of in the year ahead, you know, Cybertruck is going to be some contribution. There's going to be some help from further EV penetration growth, but to what extent are you willing to sacrifice on pricing to keep that 50% volume CAGR intact? Or are you thinking differently about margins versus your prior commentary of willing to sacrifice on margins to get more share?
It's not about getting more share. It's just that you can think of every car that we sell or produce that has a full autonomy capability as actually something that in the future may be worth as much as 5 times what it is today. Because average passenger vehicle is doing like maybe 10 hours of driving a week. If let's say it's 1.5 hours a day on average, that's 10 hours a week, ish. If you've got an autonomous, if that vehicle is able to operate autonomously and be used in some either dedicated autonomous or partially autonomous, like Airbnb, maybe sometimes you allow your car to be used by others. Sometimes you want to use it exclusively, just like Airbnb, doing Airbnb with a room in your house. That the value is just tremendous. So I think I think it does make sense to sacrifice margins in favor of making more vehicles, because we think in the not too distant future they will have a dramatic valuation increase. I think the Tesla fleet value increase at the point at which we can upload full self-driving and it's approved by regulators will be the single biggest step change in asset value maybe in history.
Thank you. Let's go to the next analyst. The question comes from Emmanuel Rosner from Deutsche Bank.
Thank you very much. 2 questions from me as well. First, following up on the autonomy. So, before you start launching these dedicated robotaxi vehicles on existing vehicles, you're improving FSD, incrementally. What is your latest targeted timing to essentially release a non-beta version or an eyes-off version that would trigger much higher take rates? And would Tesla benefit from lowering the price of FSD?
Well, obviously, as people have sort of made fun of me, and perhaps quite fairly have made fun of me, my predictions about achieving full self-driving have been optimistic in the past. The reason they've been optimistic is what it tends to look like is we'll make rapid progress with the new version of FSD, but then it will curve over logarithmically. So at first, like a logarithmic curve looks like just sort of fairly straight upward line, diagonally up. And so if you extrapolate that, then you have a great thing. But then, because it's actually logarithmic, it curves over, and then there've been a series of stacked logarithmic curves. Now, yeah, I know I'm the boy who cried FSD, but I think we'll be better than human by the end of this year. That's not to say we're approved by regulators, and I'm saying that would be in the U.S. because we got to focus on one market first. But I think we'll be better than human by the end of this year. I've been wrong in the past. I may be wrong this time. And the price of FSD. So the weird thing is the price of FSD is actually very low. It's not high. When you go back to what I was saying earlier, the value of the car increases dramatically if it is actually autonomous. $15,000 is actually a low price, not a high price. Now we will offer, I think we do sort of offer FSD as a sort of monthly subscription, although like most people don't know that. So I'd recommend maybe trying it out as a monthly subscription, so you don't have to go with the $15,000 thing. But I think, yeah, the obviously if the car is worth several times its original price, $15,000 is actually a low price for FSD.
Thank you. And the next question comes from William Stein from Truist. William, go ahead and unmute.
Great. Thank you very much for taking my question. I'd like to ask about to stick on this AI topic. We read, with great interest the developments in Dojo today, and you've spoken about FSD. But you've also, Elon, you've started this X.AI company, and for investors that think that there might be quite a bit of value in the AI features and products of Tesla, it might be concerning to see you, pursuing another endeavor where AI is the focus. So can you talk about how X.AI might overlap, might perhaps compete with Tesla, or in other ways, perhaps it enhances the value of what Tesla does? Thanks very much.
Yeah, I think it will actually enhance the value of Tesla. There really were just some of the world's best AI engineers and scientists that were willing to join a startup, but they were not willing to join a large, sort of relatively established company like Tesla. So I was like, that's actually how it got started. I was interviewing a few people, and they're like, "No, we want to do a startup." I was like, and that's all. And I couldn't convince them to join Tesla. So I was like, okay, well, better it's a startup that I run than they go work somewhere else. That's kind of the genesis of XAI. And XAI is focused on sort of AGI. So it's but I'd like to say I think there will be some value that XAI brings to Tesla. Also for the very best people in the world, they really just want to work on interesting problems. So if you take, say, our material science group, really what convinced Charlie Kuhlman to leave Apple, we were very happy and well compensated, and both what we think is the best material science group in the world, was that he got to work at both Tesla and SpaceX. He wasn't willing to leave Apple if it was just Tesla, but he was willing to do it if it was Tesla and SpaceX. So sometimes you get the best talent in the world. That's the kind of thing you need to do, and that actually has been very beneficial to Tesla. So.
If I could squeeze one more mundane question in, I wonder if you think you can hit the 1.8 million unit number with current pricing, or do you anticipate needing to continue to lower prices? Because it seems like they've stabilized. The trends have stabilized in the last maybe month and a half. Should we expect a sort of continued decreases or more stabilization for the rest of the year?
Sure. We have a really sort of restarted the referral program, which I think will be quite effective. But, as Zach was saying earlier, we don't control the macroeconomic conditions. So if interest rates continue to rise, that reduces the affordability of cars. And for a lot of people, they're really trying to balance, just barely breaking even every month. In fact, if you look at the rise in credit card debt, they are in fact not breaking even every month. Like credit card debt is looking kind of scary. So we just don't control the macro conditions. If macro conditions are stable, I think prices will be stable. And if they're not stable, then we would have to lower prices. Yeah.
Thank you. Let's go to Colin Rush from Oppenheimer.
Thanks so much, guys. As you're building out Dojo and implementing what surely is going to be a highly complex set of software, can you speak to the maturity of the operating system and how much outsourced software you're expecting to use in that system?
This is a custom software stack, so but it is designed such that you can run at a high level PyTorch and JAX. But then we have to customize it to actually run on a custom silicon. So the software stack is a combination of open source software and then Tesla software all the way to the bare silicon, which is the case for the inference computer in the car.
Okay, thanks so much. That's super helpful. And then can you speak to how you're managing some of the geopolitical risks relative to your capacity expansion? Obviously, as you guys continue to grow at this rate, you're going to be putting some folks out of business, and there's going to be some impacts around regional economies. So just want to understand how you're thinking about that in terms of some of your CapEx plans and how you're managing some of those relationships with different countries and regions.
Well, this is a period of unusual geopolitical risk. So I think the best we can do is, have factories in many parts of the world, such that if things get difficult in one part of the world, we can still keep things going in the rest of the world.
Thank you. The next question comes from Mark Delaney from Goldman Sachs.
Thank you very much for taking the question. Tesla has been making progress reducing cost and did so again last quarter. Can you give an update on when you think automotive COGS per vehicle could be under the historical $36,000 per vehicle level, and what are the key puts and takes to get there?
I think I was asked this in the past. This is very difficult to forecast. There's a series of costs that we manage. There's a series of costs in which we don't control. And so, particularly on the commodity side, where labor costs go, et cetera, it's just hard to say.
Yeah, we saw very inflationary pressures, like strong inflationary pressures for a while last year. And now which obviously makes it very difficult to reduce COGS. And now we're seeing what seem to be deflationary pressures. Certainly deflationary, if deflation is a pressure, but we're seeing commodity prices dropping as was mentioned, as Karin mentioned a moment ago. I think, what do you think? Basically the trend seems to be deflationary at the commodity level.
Definitely. There's that, and then there's also the unit economics improve as volumes grow. That's the other thing we're seeing. As we're becoming a bigger and bigger part of a lot of suppliers, economies of scale come into play. There's equipment depreciation that comes into play, equipment that was commissioned 5 to 7 years ago that used to be a part of the piece price. That's completely amortized. So we'll see situations where piece price comes down because that equipment contribution has gone away. And then we continue to have this mentality of continuous improvement in terms of labor, reducing labor, improving automation, and just continue to get better at what we do. So we have seen, I think every quarter we have seen an improvement. Of course, the commodities spiked up and down, but just in general, the trend is towards being more efficient.
Yeah, I totally agree.
Yeah, lithium prices went absolutely insane there for a while.
Yeah, and they're recovering now.
Cobalt's like a third of what it used to be.
Yeah.
Yeah, and we're still early in the ramps. Well, not early in the ramp, but early in the cost down curve of Austin and Berlin.
Yeah.
And so it takes time to work the cost out. At first, it's focused on ramp. Ramp brings cost down.
Ramp and quality, and then ramp and quality cost.
Yeah, and then once that stabilizes, we can divert bandwidth to cost reduction. And so Austin and Berlin saw quite a decent amount of cost reduction on a fundamental basis from Q1 to Q2. We'll continue to do that work. That will be helpful. And so we're just going to keep chipping away at it.
Yeah, packaging is a big element to that.
Yeah, logistics too.
Logistics is normalizing, which is great.
Qbot utilization, something that the team has been very focused on. So every bit of it.
Yeah,
it's hard.
Logistics is underappreciated. The old saying goes like, battles are won with tactics, wars are won with logistics.
Yeah, and we made tremendous improvements in cost in all fronts. On extract costs, we are down to pre-pandemic extract cost levels now. and our goal is to go further down.
So when we look at our progress from Q1 to Q2 on cost, the way that we look at internally, normalize for the impacts of mix shift with Austin and Berlin being a higher percentage of our mix, normalize for SNX being a higher percentage of our mix in Q2 versus Q1. The sequential cost reduction, it might be the largest we've had in a while. So I think it's great work on behalf of the Tesla team, and we just got to keep it up.
Yeah, it's a game of pennies. It's like Game of Thrones with pennies.
Mark, do you have a follow-up question? I think you're muted.
Yep. Yeah. Thank you very much for all the details on that. Maybe you could put a finer point on the downtime impact that you spoke about in your prepared comments, in terms of production impact, and then also to what extent there's a margin impact from those factory upgrades that you're planning this quarter. Thank you.
Yeah, the downtime, we don't know exactly the number of cars impacted because, kind of the way that we go into downtime windows for upgrades is, we set aside a period of time, but then the team is challenged to go as quickly as possible so that we can get the factories up and running again and minimize that. So it's not profound reduction, hopefully it's quite small.
I think we're getting too much into the weeds here. I mean, like we're asking for a level of precision that is not possible to answer. So let's move on.
Yeah, I think this is unfortunately all the time we have for today.
Okay.
So we'll speak to you all in the next 3 months. Thank you very much.
Thank you.
Okay. My dogs seem to like that call. Who wants to go first?
Boring, boneheaded questions are not cool. Let's go to YouTube.
Shout out
Throwback
Gally.
for a couple of years ago. Yeah. We just need Gally here with us.
We did get some AI questions. I realized from the folks that we didn't usually get, which was interesting. But there were a few that sort of were trying to get more out of Elon that was related to, hey, can you tell us exactly how margin is going to be impacted by this thing that you told us that you can't calculate? So that was, it's par for the course. I did take down some notes, but I'm curious. Any major takeaways from the call from the panel? I have a few, but I'm curious if any of you guys have any thoughts.
There was a kind of big news of the one-time Q3 FSD kind of like moving forward grandfathering. I think that's going to inspire new demand for Q3 probably for people that want to get the newer hardware and FSD on it.
The licensing agreement or pending.
That was the bombshell to me. Like that was by far the biggest piece of news. Like they're actively in conversations with probably Ford, maybe Mercedes, one of those companies. Like that's if they actually get that deal and start selling in volume, I think of the margin impact of that.
Were you surprised to hear a yes?
Yeah. I did not think they would talk about that. It's just so funny to me because to the point that Emmett was just talking about, it's like the questions that can't be answered, oh, you don't have a good answer for that, stock's down 4%. Meanwhile, dropping this actual consequential news that's going to be meaningful in the longer term doesn't do anything. So it shows you how silly these short-term movements are.
Yeah, and if history of the last 8 weeks is indicative of anything, once you hear about one, does the domino start to fall? Do other ones start to jump in? Do other people want to get on this as well? Is that why Elon said it without being prompted to ask it? Was it a chess move? Lots of things I was thinking about during that.
I was wondering the same thing. It was like a chess move that he just, volunteered that information even before the question and Q&A part came up, just to inspire more demand of other automakers coming to the table to say, hey, we want to do the FSD licensing agreement too, and not be last like they were to the, supercharger partnerships.
I was happy to hear Elon kind of drop the hammer on underscoring why other companies are going to want to license FSD, it's because not only do they not have the training data, they also don't have the compute. That's 2 points of failure, and every other company in the world has gone over 2. They don't have millions of miles of real-world training data, and they don't have anything that could process the data if they bought it, right? So they're going to have to license it from Tesla. And the variable cost of selling one additional FSD license is software margins, which are excellent. Extremely low costs of earning that.
Well, I wonder if that is that fleet-related revenue that he was talking about in the thing, that you might consider other people's vehicles fleets.
Seem that way. And yeah, James, to your point with the not having the hardware and not having the data, mind you, that's arguably the easy part. That's before we even talk about the software and figuring out that maze of which way's the right one, which one's not the next logarithmic curve, right? That's before any of that. So you have to get to that point before you even start thinking about the problem. It's it definitely seemed like here's my knight so I can take your rook.
Yeah, Tesla started putting the hardware necessary for full self-driving in cars in Q4 2016, and nobody else has done it yet. So how many years behind are they? They're 7 years behind. If they got serious about starting now, how long would it take before they had all the cameras and the inference chip in the car? A few years, right? And then after that, they would start collecting the data. And after that, they would have to process it.
Something else that stood out to me was the cyber cell. I thought that was interesting. I wonder if that's just a chemistry or a whole different thing that we're not even thinking about. What would you guys think of that?
Yeah, that caught my attention too. I hadn't heard that term before. I'm assuming it just deals with the specific cells they're going to put in the cyber truck, but it was definitely different. Hans, you were going to say something?
I saw Jordan post about this on Twitter, that he thinks that what he's referring to there is the Gen 2 4680 cell that's being produced on the lines there in Texas. Now, I think these are currently going into 4680 Model Ys, but obviously when the Cybertruck comes off the line, that at least they'll be using those. I don't know if they'll divert. That's one of the questions that I have, is if they're going to stop producing 4680 Model Ys out of Austin to support the Cybertruck ramp as that comes up. But that's my take on that, is that's just the Gen 2 cell, because the first cell that Jordan got a hold of, it was a lower energy density, and but they knew that there was a second generation cell, and that has the little swirly pattern on the bottom of the can, and there are several different improvements that have been made to the equipment that manufactures the 4680 there in Austin. And so it seems like it's basically on par as far as energy density with a 2170, but the can is much thicker, and so there's a lot more steel involved, and so they can actually make the 4680 a structural load member and still maintain the same energy density as their 2170 cells. So that's a big statement to make at this point in time, especially given Drew's follow-on comments that they still haven't even put silicon on there, and there's several other improvements that they have yet to make to the 4680 cell that will continue to drive further energy density improvements.
Yeah, I thought that was interesting. The other big thing that was mentioned was that that they would be able to solve FSD if they had enough chips from NVIDIA. That Dojo wasn't necessarily needed to solve FSD, which speaks to the fact that we have the hardware is solved, it sounds like. The software is solved, it sounds like. the training data and how quickly it's it is computed and used to feed the neural networks to come out with the answers is the real limiting factor here. So it's shout out Jordan again. It's how quickly they can compute the data. So, and again, this is let's wait and see it. Let's wait and see it in real life and it actually play out and it be useful. But the tone is now we have more detail. I feel like more than we've ever had as far as what the actual gap is to get us to full autonomy for the cars. Yeah, so that was an interesting takeaway from my end.
Yeah, just to add to that, and maybe to clarify, and not saying I'm right, so listen to James Down or someone else on this, but I think what Elon was really implying was that with more compute, then the time to train can drastically shrink. So it's not just we need X amount of hardware and then we'll be solved. It's just if we can train faster, then we can iterate quicker, and then we can find out answers quicker. So just to put a clarification on that.
No, I appreciate that. Yeah, it was just the time. It's just they just have to get more computers. They have the data, they have the fleet that they have the pieces needed to just get the flywheel turning. They just got to get more chips. That was just my takeaway.
Well, and the one thing that I do take away from it is that there's no human team that's involved in that also needs to scale. So that means they have a completely automated training ecosystem. So, their auto labeler is up to par with where it needs to be, and it can run at greater capacity, that they don't need, more humans in any part of the data pipeline or the training flywheel. So that means that they're doing basically completely either self-supervised or unsupervised training, which is basically what we expected, that they're training video data just like OpenAI trained the ChatGPT LLMs, so GPT-3, GPT 3.5, and GPT-4, where they are, they're just getting a block of text and then they'll either remove a section or they'll mask words or something like that. And they're doing the same thing for video, and they're just asking the neural networks to predict the next frame. And that is completely, you don't need humans in the loop at all to do that. And so if they're saying that training is the only bottleneck, then that is basically confirming that that's how they're doing that training.
Any other things that jumped out to y'all that we want to hit?
I mean, I would say it's interesting that the stock's really taken a little bit of a hit here after hours since the call starts down 5% now. Since the call began, I believe. So, maybe 4%, 5%, but I'm looking at the volumes. It's just a few million shares total, and Tesla trades 140 million shares a day. So it's hard to say what's going to happen tomorrow with the open. It's not like 10 million shares were traded, in the last 2 hours, like, just a handful of shares, so we'll see what happens tomorrow, but there could be a little bit of a consolidation going on here with the big run up recently and momentum traders kind of exiting now, like knowing that it's not some big blowout, just saying, all right, let me get out and just kind of breather in the stock. If you're that's just what I'm thinking from a mass psychology perspective with the stock. I mean, as a long-term investor, it's just noise, but I'm just always fascinated day to day or week to week what's going on with the stock. So that's what I'm thinking about a little bit too.
Yeah, I agree. I mean, if you look at their earnings report and you look at the call, to me, most of it was like a nothing burger. It was, pretty much right on par with what we all expected. Not a whole lot of fodder for the Bears, frankly, and not a whole lot of, like super good news for the Bulls either. It was something of a mixed bag, but basically in line. So if this is, if we go down from here, then yeah, it would seem most likely that it's just momentum traders getting out and a little short-term consolidation. So I'll be very curious to see what happens here too. Like Emmett said, none of this really does matter in the short term, but it's just, I find it interesting to see how it's like down 4% on like nothing. So, but you could also say maybe it got a little too hot. Maybe it rose a little too fast, too quick, but it's so strange to me that it dropped so significantly on seemingly nothing. Maybe they didn't like Elon's investing advice. Maybe the market wanted Elon to advise everyone to go on margin a little more.
I think what that is Elon is so used to being on Twitter. He wants to be like a FinTwit kind of creator. So he's just giving investment advice to everybody. You know, it's like, let me practice it and maybe clip it out. I think and I'll throw it over to you, Nico. I see you're off the mute. I forgot what I was going to say. I blanked with that terrible joke. Go ahead.
Oh no, it's funny that he was like giving investment advice. Like, yeah, you know, you want to just buy low and sell high. I don't know. I mean, that's just what you want to do. And I was like, come on, get out of this loop, Elon. Start talking about other things. Time to move on.
It's just, like, a little bit of margin is okay. But you know, like with anything, it can be excessive, and so but generally, Warren Buffett is a good investor.
Yeah. And he's like, we can do it 10x from here. I mean, I should be careful. Maybe 5x. You know, I don't know. Just
I love Martin's tone at the end of that one. Martin was like, "And moving on."
I remember what I was going to say. The shutdowns in Q3. So they were going to have some limited shutdowns in Q3, which says, I think, that 2 million this year is completely out of the question. I think that 1.8 million is going to be much closer to reality. Because for us to get to that 2 million target, Q3 would have needed to be significantly higher than Q2. But since they've openly announced factory shutdowns for upgrades, I think that 1.8 million is the one we should really be thinking about if you're looking at a short term or medium term. But those upgrades plus Cybertruck into 2024 should allow the company to continue growing. So I remember what I was going to say.
Yeah, that's what I was going to say, that, you know, the stock could be reacting to that as well. Just those shutdowns and talking about, you know, Q3 might be lower in production. It was interesting to hear him quote Warren Buffett. You know, again, maybe another chess move, maybe.
Trying to throw him a bone. Like, come on, bro. I also took some additional notes on some of the other questions as well. I'll be posting that on Twitter for people if they want to read that. But they reiterated that. Go ahead.
A couple of notes on Optimus bot that it sounded like were really interesting. So it sounds like we only have that, 5-ish to 10-ish bots produced. So basically what we had in the last video. So they haven't produced significantly more bots. And then he had a lot of commentary around the actuators for the bots, which made it sound pretty much like he confirmed that they are not mass producing those actuators yet, which means that each actuator for Optimus is probably being hand built right now. And I would venture a guess that is the bottleneck on continued, production of bots there in Palo Alto. But that being said, he said, if they're going to mass production of the actuators by the end of this year, that is definitely a good sign. That means that because right now they're probably working through a lot of design validation on those actuators and just making sure that they really hit the nail on the head with the way that those are built and the way that they will be able to be manufactured. And so there's, I'm sure, tons of testing that's going on with those bots just now for range of motion, cycle testing, just like we saw the video of the butt tester for the seats. Like, they're doing something like that with those actuators, doing hundreds and thousands and tens of thousands of cycles on those actuators for Optimus bot, so that they make sure that there's not a critical design flaw in those actuators before they send them out to get mass produced. Once they're being mass produced, that means that development of Optimus can kind of ratchet up to the next level. And so, unfortunately for people, I know that Scott will be disappointed, but especially Randy will be disappointed in the number of bots that are going to be deployed this year and next year. But they also did confirm that they are going to first be used in Tesla factories, which, makes a ton of sense. I think there were a lot of people who speculated that would be the thing that they would make the most sense, as far as it's the best, it's a constrained environment. It's a great place for them to get all the information that they need back from testing. And also financially, a penny saved is a penny earned. So every piece of useful work, and if they can actually do useful work in Tesla factory next year, that is huge. So I think, we got some really great tidbits of information on the development progress of Optimus. A little bit more measured than some of the most optimistic bulls, but in my mind, like, great timeline, it looks like, for the overall production. And I mean, shoot, if we have meaningful volumes of Optimus by 2035, that's still an incredible tailwind to Tesla as a company, their ability to operate and execute, and definitely their ability to create earnings. And I think we're well ahead of that schedule as it appears right now.
I think what's interesting to think about is that a lot of the commentary they had today on the call was, we did hear quite a bit about FSD AI, the bot. It was a significant percentage of the total call minutes, let's say, that were spent talking about something. And in this day and age of all these analysts, and there's an obvious trend towards companies that say AI, let alone do it. If you say it, great, we'll throw money at you. I think it's interesting to track that development, but it almost seems like Tesla, in its current form, based on what could be happening here in the next 12 to 18 months with FSD, seems to be getting some of the lowest premiums from a valuation perspective versus everybody else. Would you guys agree with that? Like, do you guys feel like they're getting way less benefit on that versus everybody else? Was that what you said, Matt, before, or was that about the energy? I forget. I think you may have said something similar, but it may have been in a different arena.
Yeah, I think Hans and I were both kind of talking about that, about how, like, they don't get credit for that. I think
Yeah.
earlier this year that was definitely true. I mean, if you look at what were they trading at, like a 30 PE or something crazy like that. I mean, that's just like clearly not giving any credit for their AI chops. I think with where they are right now, just, what are they, $900 billion market cap, something like that. I think you can make a very strong case that that's a fair price for just the automotive business, and the fact that they're going to be ramping and their margins are so strong. That's kind of the way that I look at it. But I'm more sympathetic at 900 billion than I was at 300 billion. That there's a little bit of upside optionality priced in for the AI business. So I don't think it's anything close to fully priced in. And I actually really disagree with Elon that, like, if you 5x the utility of the vehicles, then your margins go. You don't, like, the increase in margin is like so crazy, because that's all, like, the 5x increase is all increase in margin. So him saying there's a 5x opportunity overall, I think is just like really kind of lowballing the magnitude of the opportunity even before you get to Optimus. So that's just a little side comment, I guess. But I don't know, Hans, if you have anything else you want to say about whether it's fully priced or not.
I think Yashu, did make good points too about just it's not nearly as clear at this point in time how their work in AI is going to affect margins like this coming quarter. So the flow through to the balance sheet is the missing piece. And so, it's a lot more straightforward with Microsoft, and they're, charging an extra $30 a month on their Office 365 platform. And it's easier for analysts to durka punch that into my spreadsheet, and I can estimate some earnings for next quarter. And now here I can change my outlook. It's not nearly that simple with Elon and Tesla and Twitter. So, or NAI.
Those Wall Street analysts are always saying durka. Like, that's their favorite thing to say. No, I just wanted to bring this up because we had confirmation already from Elon, back in September of last year, almost a year ago now, that, the plan is to assign dangerous, boring, and repetitive motion tasks at Tesla factories to production release candidate bots. So as they become capable of doing useful work, they're just going to go put them on jobs that those bots can do. One of the ones that I think I've seen other people reference is picking up sheet metal and dropping it in front of another robot to stamp, right? You don't want to have to assign that work to a human being and say, hey, your job all day, every day is to pick up sheet metal and let this other robot stamp it. That's not great for any of those things. So yeah, you can definitely give that job to an autonomous robot and not get grieved by your union. I shouldn't have said.
Was anybody caught off guard by a somewhat lengthy conversation about like amputees and being able to like have a robot
Yeah.
like essentially be your?
I was gonna say, I think we know what Elon's favorite movie is. It's clearly iRobot. Between Will Smith's arm, the autonomous cars, the humanoids. I mean, he's ripping them off. That's all he's doing.
If Haley Joel Osment is in is in the commercial that Tesla's going to end up doing, then for sure. I think he was in that movie, right? Or am I hallucinating? All right, let it go.
I was gonna say,
No,
was anyone else kind of stunned or shocked by the sheer amount of AI FSD questions from the analysts? I think this is the first time they've ever really cared about FSD or asked questions. Like maybe I'm wrong as recency bias, but I'm pretty sure they've never really asked them questions the way they have this time. So it seems like maybe they're starting to believe.
Yeah, what's funny is I remember in recent history that being the reason there was a sell-off after earnings is because people would say Elon was talking about his science fair projects instead of manufacturing cars. But maybe now that Model Y is the best-selling car in the world, people have more patience hearing about Elon's science fair projects. Maybe after seeing the NVIDIA run up recently and lots of other AI talk, the market now thinks that's the new hot thing, and they're more.
I just want to shout out Colin Rush for asking about the operating system for Dojo. That was a very astute question. Colin is an excellent analyst, far above the standard in his cohort. So not surprised that he would ask a question that intelligent, but I did really appreciate it.
And then I also love the context of the question too. I think it was a different question, but it was along the lines of as your competition is in danger of going out of business, how are you thinking about scaling he's like kind of like he's seeing it the way a lot of retail Tesla bulls are seeing the story play out. Like, how are you going to manage geopolitical tensions as you're putting everybody out of business and all this stuff? So that was fascinating. Real quick, I do want to bring this up from Corey. So this is he's highlighting Corey Steuben from Monroe Live. Shout out Corey, big friend of the show. Image from Tesla's IR presentation finally shows a picture with no floor, essentially confirming structural battery pack in the Cybertruck. Also of note, stamped welded lower rear crosscar structure at base of rear seats. And so if I make this bigger, maybe he's talking about this guy right here, which I'm not a vehicle engineer, so I have no idea what that means, but it looks like something of to note. So I'm sure we'll get a video from the folks at Monroe Live here shortly to highlight this in more detail. Just wanted to make sure that was highlighted. Sorry if anybody had any thoughts, please jump in.
So I could talk a little bit about that. The thing that's interesting there is that that's not a casting. And if I had to speculate on why that's not a casting, it's just because the castings that they already have back there are so fucking huge that they just can't cast anything bigger. And so instead of, having a Terra casting, they have one, potentially even two large castings in the rear. And then, yeah, you can see all of that you can see there in the back is a set of stampings that are all joined together. And probably those rear castings are then joined to this structural welded stamped steel assembly. So that actually means that the body shop, for the Cybertruck is going to have, they'll have the Giga casting machine, obviously, but there's going to be a significantly larger area that's dedicated to stampings, and then the assembly of those stampings going through welding cells as well. That there's going to be more of that's allocated to the Cybertruck than we have for the dual casting Model Ys.
Well, appreciate that. Thank you very much, Hans, for that breakdown. All right. What else we want to highlight? Anything else we want to bring up?
I just thought it was kind of funny.
What's happening there, bro?
Someone was trying to FaceTime me
Earthquake.
right there. So it came across on my computer. Sorry, I don't know what's going on. I can't even see you guys anymore.
We're here.
I did think it was funny, just like random. My computer's falling over too. I'm like holding it up. Things are falling apart. I was thinking it was hilarious when somebody asked him how many robots were made, and he's like 10 million or 10. And I'm just thinking like a lot of people actually read the transcripts of these earnings calls, so that's going to be pretty funny. Anyway, I do need to run actually. I got some family issues going on, so I'm going to get going. But good talking to you guys, and thanks for a great stream, Farzad and everyone else.
Thank you, Matt.
Thanks,
Yeah,
Matt.
Nico had to drop off as well. Maybe this might be a natural stopping point here. Does anyone else have any thought they want to add? Maybe more time to digest.
I just enjoyed getting
I
to.
can keep talking for another few hours.
I love how that happens. All right, let's try this. James, you go first, then Emmett, then Hans. Let's try that.
I liked hearing Drew Baglino say 80% sequential increase in production of 4680 in Texas and reducing scrap by 40%. You combine those two things together, that's a whole lot of improvement in just one quarter. So that was a big one for me.
Awesome. Emmett?
Yeah, for me, I think this is a pretty uneventful, like no big surprises in this earnings report, except maybe the FSD licensing potential or that kind of thing. But I think this was a good earnings report for long-term investors. I think the stock it's going to continue to do well as long as the overall NASDAQ and growth stocks are continuing their run, which I think it seems we're in the midst of a nice bull run here. So yeah, there might be a little breathing room here after this earnings report for momentum traders exiting, but I wouldn't, unless the overall market's going to have a major correction, I wouldn't expect Tesla to drop too much before it resumes running back up.
Hans?
I was just going to say that I really enjoyed getting to digest all of this live with the whole community, everyone here in the comments and then the panel. It's great to have so many different areas of insight and expertise and to kind of be able to dissect it from all sorts of different angles together. So really enjoyed this.
Me too.
Likewise. As always, thank you all very much for joining us every quarter on all the different channels that we stream this to. Thank you, Hans. Thank you, Emmett. Thank you, James. I almost called you Hammett. Hans
right.
and Hammett and Haynes and Harzad. Really appreciate you guys. It's great talking. Thank you to the mods for keeping all the conversations awesome in the comments section. Producer wife, she was not available today, unfortunately, but I still kind of did something. So
you have to do the self clap on the outro.
I don't know if I deserve it. There you go. One of these.
In honor of producer wife. It's not
fair
for
enough.
you.
Okay. As long as it's not for me. Cool. And then if you're following the story closely, please make sure you subscribe to all the channels that you're watching. Hans on YouTube and at Hans and Nelson on Twitter. Emmett with Good Soil on YouTube and Emmett Peppers on Twitter. And James Stevenson at @ICannot_enough on Twitter and James Stevenson on YouTube. Some of the best content you'll find regarding Tesla and really other stuff as well from all these gentlemen and everybody else who joined us previously. Thank you, Nico, as well. Thank you, Alexandra. I hope I'm not missing anybody else. Herbert was supposed to join as well. Matt Smith. I did want to forget him, actually. We don't have to worry about him. Screw that guy.
And Elon and Zach for joining us. That was great.
Yes.
Yeah.
That was fantastic.
And did you mention Yashu?
Oh, and Yashu. I definitely didn't want to forget him. Yashu at Hit That Bid on YouTube and Yashu Sharma on Twitter. All right. I'll let you guys go. Thank you all very much. Almost 4 hours in, and we'll see you on the next one. Bye-bye, everybody.
All right. Thanks.
Thank you.